All right. Hello, everybody. Welcome back to another episode of The Market Close. We are live, and we've got a lot of earnings to talk about today. It is about to be madness in the after hours. But before we get into it, we got a bunch of headlines that happened earlier in the day that we got to talk about. S&P 500 has hit a new all-time high. All-time high, 733.86. We were up 1.4% on the day. We haven't had many days this year where we've been up almost 1.5%, up pretty nicely for the year at this point. I mean, the average return is about 7 to 8%, and year to date, we are officially 7.5%. So the S&P is moving. Oil's going down. We talked about everything in the morning with Iran and oil, which was kind of the catalyst to get the market to really get more excited outside of everything that's happened, obviously, in the semiconductor space. But the idea that the Iran war is going to be over, that there's a better chance for negotiations, that is what's lifting the S&P. NVIDIA came to the party, finally, 5%. I see NVIDIA getting some love right there. 207.30 on the day. You got SanDisk, which basically is flat for the day, but it did recover from the 1365 lows that it saw today. Google, which I don't think touched 400. No, 399.85, 4.81 trillion, has not touched 400 yet, but still a massive day after that Anthropic news that broke yesterday. SMCI, great earnings. That's up 22%. HUT, big deal this morning for, you guessed it, compute capacity, which is what the market cares about. 107.99. That's up 34% on the day. OSS went absolutely crazy, up 57% on the day. We'll have stock talk on tomorrow at 11 a.m. to talk more about that pick. But at one point, it was up 65%. So you had some people take some profits, 15.29, 56%, just a massive move. Meta flat, Microsoft flat, and none other than software, which was once again down on the day. Micron gave you $20 of a dip, or I should say $40 of a dip. It was at around 629. Didn't matter. Ended up coming down and then coming right back up. Same thing with SanDisk, Micron right there at 660. So quite frankly, I mean, every dip is getting bought. There's not literally every single semiconductor stock going up into the moon, like a Navitas that's down 6.5% today, Arista that's down 14%, Broadcom that's down 1%, but CoreWeave 8% in the Neocloud space. Nebius almost 200, 195, up another 11%. It's up 72% on the month. And then you have IREN finally making a move as well, 61.15. That's up 11%. So you just had a ton of different momentum that happened in the semiconductor names. And I think part of the reason it happened, which was honestly the biggest story of the day, and then we'll get into some of the earnings preview, is this news around SpaceX and Anthropic. So remember all the tweets that Elon had where he was, pretty mean to Anthropic because he just doesn't like Anthropic. And, he said every, insult you could possibly say about Anthropic for the past year. Well, now they're one of his biggest customers. SpaceX has signed an agreement with Anthropic to access Colossus 1, which is the 220,000 NVIDIA GPUs that SpaceX, or at XAI bought. SpaceX now bought XAI last year. Which are H100s, H200s, and next-gen GB200s, your Grace Blackwells. Anthropic plans to use extra computing power to directly enhance capacity for Claude Pro and Claude Max subscribers. He probably does hate Sam Altman more. That's fair. This is such a genius move, in my opinion. And I also think it's a move that, yes, probably had to be done more than Elon wanted to do this. I think he had to do this. And there's a couple of reasons why. First of all, Elon basically just turned the excess compute that SpaceX owns via XAI into essentially a Neocloud. I mean, Nebius has gone to the moon. IREN has started going to the moon. CoreWeave is up. All these companies are catching a bid by the market, which is really important as we get into the SpaceX IPO, because the market sees them as these data center plays, and the market just wants to bid up data centers as the S&P hits 734. The problem with XAI over the past couple of years has been everyone's been leaving, which is, bad for talent. But number two, not a lot of people use Grok. So in a world in which GPT and Claude and Gemini are obviously taking all of the, not only consumer demand, but enterprise demand, you've got a lot of excess compute that, Elon could do some stuff with that in Tesla. But at the end of the day, if you have this much compute, what if you could sell it? If Meta did this, that stock would go to 900 tomorrow. But I think now that SpaceX is doing it, there is another angle for people to justify buying it at a $2 trillion valuation, which is Anthropic, which basically has an unlimited pocketbook of money to spend on compute, which is why, the news on Google is pumping it today, $200 billion that they're probably going to be giving to Google over the next 5 years. If they can give, I don't know, 50 billion, 100 billion to SpaceX of revenue over the next couple of years, That's more revenue that SpaceX wasn't getting on these GPUs that were probably sitting idle and not being used because Grok just doesn't have that much capacity. So very big news today in the context of SpaceX, probably juices up the IPO. You got ASTS up 10% of the day. Rocket Lab also making a bit of a comeback right there, 84.39. That's up 7%. Some of the space names were, I mean, they were hit pretty hard over the past couple of days, and they're starting to make a bit of a comeback. ARM right there up 12%. We got that going into the print. But I thought that was one of the most exciting pieces of news because obviously, you know, that is going to be important for SpaceX's ability to sell compute, but also for Anthropic to get excess compute. Anthropic also raised their limits on Claude Code now. So all the people that left to Codex over the past couple of weeks, maybe they start coming back to Claude. It is literally an arms race for compute. And in that arms race, you need memory. In that arms race, you need capacity. In that arms race, you need optics, which is why all of those names obviously have been doing as well as they've been doing. And, you know, that's why they're capturing the bid. AMD 417 gave us 402 later or earlier in the day. So, I mean, even that dip at 402 ended up getting bought. It's a dip buyer's market right here, and buying the dip is rewarding people at scale. Starbucks is up 2%. Tesla almost back to 400, 399.74. Obviously, Palantir and your software names have just not been able to catch a bid. I stay firm on my theory that I have on what's happening in the market right now with software, which is that they are absolutely being sold off. And the reason they're being sold off is because the market wants to allocate into data centers and into semis. And you either fight the trend or you stay on the sidelines, but you can't really criticize the trend, even if, you know, maybe the trend eventually is going to flip. But right now, that's what's happening right here. Also, JP Morgan, they put out a note this morning. AI token costs eating internet profits alive. The desk says Meta, Shopify, Spotify, Pinterest, and Roku all are flagged as rising AI LLM inference and GPU costs, adding it as a very sneaking suspicion this becomes a bigger margin issue as the year goes on. These aren't all pure play software companies, but the fact that they're rooted in that software ecosystem, I think you got JP Morgan basically saying, hey, we've got some problems in regards to how we think about software. And if software continues to be a little scarier in regards to the margin compression that they're going to have, then obviously that's going to be an issue for these equities that unfortunately have just not been able to catch a bid. Shopify right here, once again, wow, 2% down, 133 to 105 within a day because it's seen as a software name. It's just not what the market cares about. Earnings, okay, so we got 6 minutes. Let me know who's long these names today. So we've got, and let me know if I'm missing any, we've got ARM, we've got Dash, we've got Snap, we've got Axon, we've got Applovin. What else do we have? This is a big day for a ton of different earnings. Yeah, Reddit ended up taking a hit today, which was not the best. IONQ, is that today? Oh yeah, it is today. Okay, the quantum, I don't know why the quantum stocks are moving today. I didn't see a headline on that. So if anyone has it, let me know, but I'm not sure why. Fortinet, Kratos, Redwire, Warner Brothers, I guess they're still reporting earnings. Fastly, we have a swing on that. We have, what else? Chime is today. Honest Company, I know a lot of people like that one. Let's see if they can incorporate AI into biodegradable diapers. Beyond Meat, yep, you got that. That's going to be an interesting one. That's up about 11% on the day. And Coherent, yeah, that's another big one. Coherent is also important. So let me know which one of these people own, but obviously a lot of different names that we have on the day that we'll be reporting, and we'll be trying to cover all those. Yeah, Rocket Lab is tomorrow. Rocket Lab is tomorrow. TTD is not today. TTD is tomorrow, I believe. Symbotic is today. Okay, so I'm going to have a lot of work to do at 4 p.m. We are going to be running around trying to get all these names, but we will eventually get to all the earnings. Technical Thursday will happen tomorrow after the bell. We also have Dutch Bros, so we'll take a look at that. I don't think we're going to be listening to any of these calls today. There's just way too many earnings to go through, but we'll see as we get towards the end of the show. SoFi right there getting a little bit of a move. S&P 734.49 as that continues to go green. Is Trade Desk actually today? If it is today, we'll get the results, but I didn't see it. If it is, we will obviously look at it. IONQ said it won an advanced quantum system inking and won a government contract. Is INFQ catching a bid based on that? INFQ inflection. Yep, that's up 13%. Okay, so all the quantum names basically catching a bid. It has been, quite frankly, just one of the most incredible weeks I think we've all experienced in the market, seeing the divergence with these semiconductor names in the broader and the rest of the market that really hasn't picked up as much as the semis. An interesting stat that was put out today by BITG, which again is just quite incredible when you think about it in a vacuum. So if we look at the top 10 performing stocks in the NASDAQ in 1999, they were up an average of 559%. The top 10 stocks going into the March 2000 top of the dot-com bubble were up an average of 622%. The top 10 NASDAQ names over the last year in today's market, 2026, are up an average of 784%, surpassing the dot-com bubble. Now, one could argue that sounds crazy, but then you take a look at this chart right here. This is SMH Semiconductors in the blue line in terms of market capitalization. And then you have the red line, which is their forward earnings growth. So it sounds scary to say all these names are up, 800% over the past year, which is significantly higher than it was even at the dot-com bubble. But then you look at the earnings growth and you say, what if it's actually justified? Because the earnings growth and the trajectory of the sort of vertical nature of that earnings growth did not look like it did basically in 2000, right? So the fact that you're seeing that much level of momentum in the context of earnings growth, I think is also really important and probably the reason why the market is giving these names the bid that they're getting. 734 on the S&P, NVIDIA 208 getting a end of day breakout. SanDisk going green, SMCI going green, AMD also continue to go green, 420.69. All of these getting a lot more of excitement. It's nice for NVIDIA to show up to the party today. Obviously, it is the center of the semiconductor ecosystem, and it hasn't been there, but today it shows up 208. NVIDIA 5.06 trillion. Google almost got to that 5 trillion. Google right there at 4.83. These are the names we have for earnings. Let me know if anyone owns any of these. We have Honest, Beyond Meat, Coherent, Symbiotic, Chime, Fastly, Redwire, Kratos, Fortinet, IONQ, DoorDash, Applovin, Axon, Snapchat, and ARM Holdings. I think ARM is going to be the big one that we look at today. Can they continue to justify the CPU demand that the market is expecting, given Intel and AMD kind of set up the blueprint for that? A Street wants 1.47 billion in revenue and 58 cents of EPS. So if ARM can deliver, I think that is the most important earnings. App obviously important for software, Axon important for software. And then you have Coherent important for the optics market. So important stuff. Big day, Wednesday, May 6th. Thank you, everybody, for being here. 4 p.m. The stock market is now closed. All right. We are done for the day. We are done for the day. Earnings should be beginning in literally a couple seconds. Coherent ended the day at 344.42. S&P 500 ended the day at 733.86. That's up 1.39%. NVIDIA 207.51. Google 397.98. AMD at 420.96. Shopify ended down 2%. Palantir could not catch a bid, down 1.5%. Rocket Lab up 7.48. Even Robinhood got a little bit of a move, 79.05 off that Bitcoin momentum. Bitcoin right there at 81,473 was 82 in the morning. And then NBIS and IREN, absolutely crazy day as those also made a massive move as well. Jason just texted me and he said he should be available for Technical Wednesday today. So, folks, I think we get Jason today. He just texted me. All right, Jason will be on probably in about 20, 30 minutes, and we will have the technicals for today. So, yes, Asian Steve will be on in a bit. All right, so let's get through these earnings. So we're going to do it today instead of tomorrow. Let's get through the earnings, and then we will get into all the technicals. All right, earnings. Warner Brothers, they missed by 1,070% on EPS. Doesn't even matter anymore. I don't know for Warner Brothers, given they're being acquired, but negative 117 versus negative 10 cents. That's a pretty ugly miss. Is the stock even reacting? The stock's down 1%. Stock doesn't care. Yeah, I don't think the stock should care, right? not on a day like this. I mean, or not given in the scenario because they're going to be acquired. But that's what you got for Warner Brothers. Okay, Symbotic. They missed by 86% on EPS. Stock's down 6%. Beat by 2% on revenue. Revenue's up 23% year over year. EPS is up 150% year over year. 676 versus 662. EPS was a miss by 86%. Hold on. Okay, cool. So Symbiotic, that stock getting hit. Definitely got a bit of a move right there, down 5.8%. We'll see if that one ends up recovering. But so far, that one's red. Beyond Meat, that's down 2%. Symbotic, that's down 4%. IONQ's down 1.3%. Kratos, are we getting a pump? Kratos is getting a pump, 7%. This one's been hit pretty hard for the majority of the past couple months. So it's nice to see that one getting a little bit of a move. We'll get the numbers in a second. 371 million, 22% growth. And they have consolidated bookings of around 1.715 billion. Kratos, that is up 6%. Coherent's a little green. Don't have the numbers yet on that. DoorDash also flat. Axon down 2%. Axon still treated as a software name. Axon beat on the top and the bottom. EPS 1%, revenue 4%. EPS 1%, revenue 4%. 161 versus 160, revenue 807 versus 779. Axon down 1.5. Let's see if that recovers. Fell to 369 now at 375. ARM is the big one here. What do we got? We're green. We are green. 4%. Can we hold it, ARM? It's a beat and a beat. It's a beat and a beat. 3%, 60 cents versus 58 cents expected. EPS, that's a beat. Not the biggest beat, but that is indeed a beat. Revenue beat by 1%, 1.49 versus 1.47. EPS of 9%, revenue of 20%. That candle now goes red. It is not a massive beat, just like AMD, but maybe that doesn't matter. Maybe that doesn't matter if ARM says what essentially Lisa Su said, which is that CPU demand is going to massively increase growth estimates. Wow, their guide isn't the most impressive either. Street wanted 1.25. They're coming in at 1.31 versus the estimate. Fourth quarter adjusted EPS 60 cents versus 58 cents. Again, the revenue is a very small beat. Stock's now down 2.6. We'll see if it ends up reversing or if it stays there. Again, AMD did that originally as well. It went down before it went up, so we'll see if that changes. Applovin, that's flat. Axon down 4. Snapchat, don't have the numbers yet. Oh my goodness, Fastly. That just got hit. 16% down. Now it's 12%. Now it's 16. 31 to 27. This one's going all over the place. Not having the same reaction as DOCN yesterday, DigitalOcean. 31 to 14 as that one goes down. Fortinet's up 10. We'll pull this up in a second. Fortinet's up 10. Don't have the Fastly numbers yet. Redwire, that's flat. Fastly down 19, 25.90. They must have missed badly if we're not getting their numbers. Yeah, Fastly going down. Yeah, it's actually, if they have a quarter similar to ANET, then that might end up being how they end up getting hit. ANET right there, that's also down after hours. I don't have Honest yet. I don't have Fortinet yet, but Fortinet is up 10. Oh, DoorDash is getting it. 5% for DoorDash, which happened last time, then reversed, but now it's down. Applovin, let's look at this one. This is the big one. Beat by 3% on EPS, beat by 3% on revenue. Street doesn't really care. Street doesn't really care. And quite frankly, it's not the biggest beat either. But they did beat 1.84 versus 1.78. EPS 356 versus 346. Revenue's up 59%, which is deaccelerating quarter over quarter, right? Last quarter was 67%. So you have a bit of a decline Q over Q, which is okay. Year over year, I think that's still up a lot. EPS up 113%. Street not really caring here. Fortinet's up 17. This is cybersecurity. The other cybersecurity names have been wrecked. CrowdStrike and Palo Alto, or at least they haven't gotten a 17% move, given they've been seen as software names. This one going the opposite direction. DoorDash, they beat by 17% on EPS, 42 cents versus 36 cents. They missed by 3% of revenue, 4.03 versus 4.15. Revenue's up 33%. EPS is down 5%. DoorDash down 5%. Fortinet up 19%. Coherent's down 2%. They beat by 1% on revenue, 1% on EPS. EPS 141 versus 139. Revenue 1.8 versus 1.78. Similar to Lumentum. Lumentum had bigger beats, but both of these stocks went up like crazy. Again, NVIDIA invested $2 billion in both of them. Not really seeing massive action after hours. Applovin's up 1. DoorDash just flipped. Wow. Talk about a reversal. It was down 5. Now it's up 10. IONQ also flipped. That's up 4. IONQ's numbers. Where are they? Beat by 498% on EPS. 207 versus 52 cents negative. That's a hell of a beat for IONQ. Even if they did that through some tax adjustment or whatever, that's a pretty big beat. 30% revenue, 64 versus 49 million. 9% during the day. They got a new contract, 5% after hours. That one's moving. ARM also flipped. It was down 3, just like AMD. Now it's up 2. Let's see if it can hold on to that momentum like AMD yesterday and keep it going. But you got a big bounce down, almost actually 4 on ARM, reversing. Now it's up barely 1. Street's struggling with that one right now. The big ones that are down, Redwire's down 2, Fastly's down 30. That was just getting absolutely destroyed. Fortinet going up 20. That one making a move, 21.7. Okay, Fortinet, the numbers beat by 32% on EPS, beat by 7% on revenue. 30% on EPS, 7% on revenue. 82 cents versus 62 cents EPS. 1.85 billion versus 1.73 billion on revenue. Revenue's up 20%, EPS up 41%. Yeah, I guess Fortinet deserves it. I mean, CrowdStrike and Palo Alto are not beating in the way that Fortinet's beating. Dutch Bros, I do not have the numbers. However, the chairman of the board of Apple, Arthur D. Levinson, is scheduling, or not scheduling, he is on the open market selling 250,000 shares at $284.76. He just sold 71 million worth of Apple. Apple is flat after hours. Not really making a move right here. Coherent down 5. Still don't have the Dutch Bro numbers yet. Redwire down 2. Fastly down 26. Chime up 9. Applovin getting a pump to 7, which is nice to see because honestly, it's a software name that probably deserves a pump. 8% up for Applovin. 508. 508. Is Reddit getting any move from this? Reddit getting nothing, even though they're also an advertising. Applovin right there, still green. Dutch Bros, they beat by 7% on EPS. And they beat by 3% on revenue. 464 versus 449 on revenue, which is up 31% year over year. EPS is up 14%. 16 cents versus 15 cents, beat by 7%. So you got a double beat on Dutch Bros. Double beat on Dutch Bros. IONQ, massive double beat. That's up 6%. ARM, again, a double beat, not a massive one, but enough where if it's paired with some good stuff on the earnings, maybe this one gets a pump. It was down 4, 225 to 244. Now it's green. Beyond Meat's down 9. Beyond Meat is down 9. Kratos up 3, Fortinet up 18. Trying to still get some of the other numbers that we have. Applovin, you know, Applovin getting a pump is actually really important because none of the software names, none of them, Palantir, ServiceNow, none of them could get a pump. So whatever Applovin reported, and it was a basic double beat by about 1%, so it wasn't that crazy. There's something else the street has to be super excited about to give Applovin this move, which maybe changes the tone that the street has on software. This is what we got on Applovin, and then we'll keep going from there.
Mike, Applovin for the first quarter delivering a 16-cent beat on earnings. Revenue too coming in ahead of consensus at 1.84 billion. The street was looking for 1.76. And if we look to guidance, strong for the first quarter and second quarter when looking at EBITDA. So the company is guiding higher than what the street was expecting. The earnings call begins at 5 p.m. Eastern, and the main focus will be on the company's competitive positioning in the mobile gaming advertising market. The stock down about 30% year to date on these broader displacement AI fears. Stock higher, though, on this report by around 7% in overtime. Guys, back to you.
Seema, thanks. Seema Modi. Let's get to the headline story today, and that would be the big rally in
Okay, I mean, not seeing anything super crazy on the app print, but it's enough to get the street giving it 6%. ARM, are we moving up? It was down 4. ARM has flipped, fully flipped, 10%. Fully flipped. You cannot stop these CPUs. You cannot stop these CPUs. My goodness, right here. I still don't have the Fastly numbers, waiting on those. Obviously, it looks like it had to be a pretty ugly miss for the street to be taking it down right here. Snapchat, they missed on revenue. They beat on EPS. Snap is down 3. -5 cents versus -7 cents. So they're still losing money after 15 years of being a public company. And they missed on revenue by 12%. Snapchat is down 2. Okay, so ARM looks like they're the winner, along with Applovin. DoorDash also a big winner. IONQ's pump is fading a little bit, but that's still green. Fortinet absolutely destroyed, 18%. And that's up with a massive double beat. Axon flipped green. It's actually nice to see Axon flip green. That was red. So the fact that another software name flipped green along with Applovin, you got to think there's some juice inside of IGV. Honest is up 2. Don't have their numbers yet. Coherent getting the Lumentum treatment. It was a very small beat on the top and the bottom for Coherent. Lumentum had a way better quarter, but Coherent was up a lot. Wow, Fastly beat EPS by 44%. Street still didn't care. 13 cents versus 9 cents expected. Revenue 173 versus 171. Revenue's up 20% year over year. I mean, that's a pretty gigantic beat on EPS. Not enough, I guess, for the street to get excited about that. 44% is what I'm seeing right there. Applovin Q2 adjusted EBITDA. Street thought they would do 1.59. They're doing 1.65 billion. Adjusted EBITDA margin. Street thought they would do 83.8. They're doing 85. So I guess the guide they beat on the top and the bottom as well. Street didn't care, or Street cares, but not enough to keep it at that 9% move that it's having. But at least it is green. ARM right there, 9%. 9%. Yeah, the stock was up 150% this year. Exactly. That's, part of the reason. That and Lumentum, which was light still down on the day. Lumentum, yeah, it was still down 5%. Down 1% after hours on Coherent. Zillow, they had earnings. Zillow down 5. EPS, they beat by 15%. 53 versus 46 cents. Revenue, 708 versus 705. Beat by 0.4. You got a double beat for Zillow, but no bid up. Coherent down, Symbotic down, Beyond Meat. I don't have Beyond Meat's numbers, but it's down 6. Fastly starting to get a bounce now from that 24 low, now up to 25. We'll see if that green candle can continue. Snapchat down 4, ARM up 8. I don't have Honest or Redwire. Let me see if I can get that. Dutch Bros again, double beat. DoorDash missed by 3% on revenue. Street didn't care. They beat by 17% on EPS. And we need Redwire still. Symbotic again missed by 86% on their EPS. App is getting faded a little bit here as well. Again, App's a software name. So for a software name to go green in this market, you've got to really beat. And they didn't really beat. Like, they beat by 1%. But so I'm curious if the market keeps it. Oh, man, it's getting faded hard. It was up 10%. Now it's up 2%. Axon, same thing. Yeah, Axon, same thing. Okay, so I guess we got to see how the street's going to think about this. Honest still don't have their numbers. Let me see if I can get that. And I don't have Redwire either. I don't have Redwire either. Honest, I think last time we had to wait for Honest too. So that one might actually take a second before we get Sezzle. Don't have those numbers yet either. That is a fintech, SEZL. That stock is up 13. Not easy for fintechs to catch a bid in this environment. We'll try to get those numbers. Beyond Meat, they were expected to lose 10 cents. They lost 10 cents. Revenue, Street wanted 58 million. They came in at 52 million. Almost exactly. Almost exactly. Beyond Meat, still down. Still down. Snapchat, wow. Our relationship with Perplexity amicably ended in Q1. that was actually something that bid up the stock a while ago, that that they were working with Perplexity. Amicably ended. That is that's a hell of a way to introduce or to get rid of a partnership. Coherent still down 6, Symbiotic still down 3. And you're seeing Applovin barely hold on to that 2%. Was that fake news? I mean, well, it couldn't have been fake because it just, I guess, ended now at this point. DoorDash, here are those numbers. And then we're going to try to get to all the other ones that we haven't looked at yet.
But it was a miss on revenue, $4.04 billion for the quarter, falling short of the $4.14 billion street estimate as total orders were light. That's a contrast to Uber this morning, which reported a stronger delivery quarter. Now, the key metric here for DoorDash is marketplace gross order value, and that was only a slight beat, $31.6 billion versus the $31.5 billion estimate. Profitability was better with adjusted EBITDA topping estimates, though still below the high end of DoorDash's own forecasted range. And then looking ahead, Dash's Q2 guidance was basically in line, GOV of $32.4 billion to $33.4 billion, with the adjusted EBITDA midpoint slightly below consensus. Now, one thing to watch, DoorDash says its Dasher gas relief program will cost more than $50 million in Q2, which it plans to partly offset by pulling back investment elsewhere. But still, those shares up 9.5% after hours.
Yeah, they've been, I was going to say they've been weak, and obviously people braced for a little bit worse than that, at least on first blush. Mac, thank you. Applovin earnings are out. Seaman Mo.
Okay, so DoorDash and App, both good quarters. App's getting faded. DoorDash is actually not getting faded, 14% on the dash, even though they missed. This is very weird after hours. This is one of the weirder days I've seen. ARM looks like it wants to hold. It's not as explosive as it was, but it's holding. If Renee can kill the call, hopefully that continues. Honest, I do not see the honest numbers for those that are saying it's out. I do not see any honest numbers. So I don't think we have that yet. I don't see Redwire either. Let me see if I can check another source right here. Redwire. Nope, Redwire is not even on the website. Honest is also, let me check the website. Oh, it's on the website. Okay, Honest we got. Honest revenue is down 20% year over year. 78 million. Gross margin increase by 3.9%, 42.6. They lost $100,000. Adjusted EBITDA decreased to 3 million, and they have 90 million in cash. CEO, we are pleased with our first quarter results, demonstrating the powering Honest growth is successfully transforming Honest into an enterprise that is more strategically focused, growth-driven, and structurally profitable. By sharpening our focus on areas where we believe we have the greatest right to win, particularly with our wipes and our personal care platforms, we delivered accelerated organic revenue momentum and achieved record gross margins. I'm not sure what they mean by accelerated organic revenue momentum. They're down 20% year over year. Unless that's some new metric they came up with to try to make sense of the revenue growth. This expanding profitability creates a virtuous cycle, enabling us to strategically invest in our brand and expand Honest households with babies, big kids, and even no kids at all. Thanks to an incredible discipline of our Honest butterflies, we are reaffirming our full year guidance and confidence in our path to sustained profitable growth. Okay, that's what you got for Honest. That's what you got for Honest. They didn't say AI. They had to mention AI somehow. We will make sure your babies are ready to live and adapt to an AI-powered economy by having the best biodegradable diapers to keep them safe when searching things on ChatGPT. Something, you know, something could have helped. Applovin up 2, DoorDash up 13. Whirlpool, did we have earnings on that today as well? We did. That is down 15%. Is no one buying a washer and dryer anymore? Do people not wash clothes anymore? What is happening? Whirlpool is increasing prices and cutting costs to restore profitability. Organic sales are down 6% year over year. Revenue is down 10% year over year, 3.2 billion. Their EBITDA margin is 1.3%. They lost 56 cents. Sorry, they lost $1.43 a share, and their free cash flow is negative. How much CapEx are they spending for their free cash flow to go negative? $896 million negative for Whirlpool. This one had a bad quarter early 2025, though, I remember. So this one's kind of following through in terms of the names, or in terms of its track record of just like not having the most efficient growth. Kratos up 3. That pump also kind of faded. It was up 7. You guys, Fluence is today. I don't see. Oh, never mind. Fluence is up 21%. Let me pull up the. Again, we had like almost 25 earnings today, so definitely I'm going to miss some on the list. But Fluence, okay, revenue $46 million, up 7% year over year. Gross margins of 10%, adjusted gross margins 11%. They lost 30 million. Adjusted EBITDA, they lost 10 million. Backlog 5.6 billion. They have 412 million in cash. This was an energy company that got a lot of excitement in January. I think it pumped to like almost 40, right? It got to $33. Then it came down all the way down to the 9s or 11s and 11.40, and now it's at 16, up 24% after hours. CRWV is tomorrow. Are they fuel cells? I believe they are in that fuel cell range. Someone correct me if I'm wrong, but I believe they are. Honest down 1, Beyond Meat down 10, Chime up 3. Up 3. I still don't have the Sezzle numbers, trying to get those. But ARM is the one that's like, I guess, the winner here, along with Fortinet and DoorDash. They are the ones. In a more way, here is Snapchat and what we've got on that one.
In the range of 152 to 155 billion, roughly in line with estimates. Snap saying it has ended its relationship with Perplexity. The stock is down by about 3% after hours. Zillow just reporting earnings, Q1 adjusted EPS of 53 cents, beating estimates of 46 cents. Revenue also coming in higher than expected, but
So we talked Zillow, we talked Snap, both of those not really catching a bid. It's ARM, baby. It's CPUs. 11%. Again, the earnings really didn't give that much of a big top line, bottom line beat, but I think the street's expecting them. Guidance also wasn't that big of a beat either, but obviously the street's expecting them to say something around CPUs. Remember, ARM raised their annual guidance to 15 billion of revenue a year from 5 billion. So they're talking about basically 3 to 4xing the revenue, but they did that back in February. That's when the stock really got to move. So there's going to have to be something that they're saying here today that is more exciting. ARM right there, 263 after hours. Revenue this quarter was a record 1.5 billion, our highest quarterly revenue ever. As AI becomes more agentic, demand for ARM AGI CPU, ARM's first data center chip, has exceeded expectations, reinforcing ARM as the compute platform for the AI era. I think that's the one sentence. I think that's it. As AI becomes more agentic, demand for the ARM AGI CPU, ARM's first data center chip, has exceeded expectations. That is it. That's what the street needed to hear, and that's what they got. 265 up 11%. ARM probably trading now at around 85 to 90 times sales. But that growth rate is what the street wants to see potentially in the future on their CPUs. Fluence up 21. Fortinet up 17. Kratos up 1.4. DoorDash up 11. Applovin up 1. Axon goes flat. ARM up 10. Snapchat down 2. Meta-backed Scale AI just won a $500 million defense contract. Meta-backed Scale AI just won a $500 million defense contract. Meta flat after hours. Meta invested about $15 billion into that company. I don't have Aurora Innovation yet, but that stock is down 6. Let me see if I can get that. Aurora Innovation. I don't see numbers. Stock's down 6. Stock is down 6. U.S. officials to Axios. Trump will resort to military action if we don't reach an agreement before the China visit. Dude, bombing Iran right before China. I don't know how the market's going to think of that. Yeah, guys, I don't have Aurora. I'm still waiting. It's obviously probably out. It's not on their website. Stock's down 6. Is it on the website? Let me check again. Let me refresh. Press release. Okay, I got it. All right. Aurora. Does this company have any revenue? I don't see any numbers. Am I on the wrong thing? May 6th. I don't see anything that would equate to a revenue or EPS. This is a $15 billion company. There's a quote from the CEO, and then there's, quote, business highlights. I really don't know what to do with that, guys. I don't know what to do with that. $15 billion company. I'm not seeing anything there. We're seeing incredible customer momentum with early adopters planning for 500 Aurora driver powered trucks. The industry sees the value of the Aurora driver and what it can do for their businesses. Where is it? Why would it not be on the press release if it's there? Where the hell do they put the numbers? How do you not put it on the press release? Yeah, half cash, half stock. That's what. So where do I have to look to find the earnings outside of the earnings press release? I'm just curious. Okay. On the site, someone send me the link if it's. I will show you guys what I did. Here's their website. Aurora announces first quarter results. I clicked it. And then this is what I get. Is it in the presentation? Here's the presentation. I don't see any numbers. Dude, what company does this? Put their numbers at the last slide of the deck? It's on the 15th slide. It's basically the last slide because the 16th slide is just their logo. I can't judge this company. I know nothing about it, but I've never seen a company do that. Like, ever. Like, I've legit never seen that happen. Revenue was 1 million, which is down from 3 million. Research and development, 195 million. Selling, general, administrative, 44. They lost 244 million. CapEx, 25. Net cash, 159. Okay, so revenue of 1 million. They lost 244 million. That's what you got. Redwire. Where are the Redwire numbers? Redwire's down 6 as well. Did Redwire hide this? Do I have to solve a puzzle to get the numbers? Redwire, it's not on their website. It's not on their website. When they're not good, you hide them. Yeah, but if the company's not expected to have massive, massive revenue and the street's willing to give it a $15 billion valuation regardless, then I don't know if they have to hide it. Like, the street's kind of accepted you don't need revenue if they're willing to give you 15 billion of market cap for $1 million of revenue, right? There's got to be a bigger growth story the street cares about. Sezzle's up 14. Again, Fastly had a miss on revenue, but a beat on EPS by 44%. Stock still getting hit. Applovin lost all of it. Now, remember, Fastly's still software. It's more agentic infrastructure to an extent, but it's not selling chips. It's still in that IGV bucket. So, I mean, any miss or anything the street doesn't like, if they're not going to give Applovin a bid, if they're not going to give Applovin a bid on 60% growth or Palantir a bid on 85% growth, maybe they once again don't give Fastly a bid either. Redwire, I do not see any numbers on Redwire. It's down 5%. Okay, now I got it. Wait, no, I don't have it. All I have is Redwire engaging in an equity distribution agreement with 9 financial institutions to offer up to $350 million in common stock. I have dilution on Redwire. I don't have earnings numbers. Redwire down 5%. That's crazy. Where are the earnings? Like, does anyone have the earnings on Redwire? Like, why am I getting a dilution PR and not an earnings PR 30 minutes after I should have earnings? Palo Alto, a little bit of a pump. Maybe Fortinet helping that one. Fortinet, that is also up 14%. Someone said Redwire's tomorrow. Hold on. Redwire is... Trade Desk is tomorrow. Maybe it is tomorrow. I thought it was today. I thought I saw it on my list. Okay, maybe we're just not getting it. Maybe it is tomorrow. Redwire should be today. Okay, well, I don't see these earnings. That's what I thought. I thought it was, it's on my calendar for today, unless the calendar gets, sometimes the calendar gets it wrong. 89.95 for Fortinet. Again, that was your green winner. All right, so summary here is that ARM wins along with Fortinet and DoorDash. Fortinet, big beat. DoorDash, not a big beat. Still don't know why the street likes it so much to give it a 12% move, but street likes it. We'll have to go deeper into that one. And then ARM said one sentence about agentic age for AI CPUs, and that's why I think they're up 9%, because the actual earnings, I mean, they beat by 1%. That's not Intel or AMD worthy, right? So not sure why that's getting that big of a bid, but I think the call will determine what happens. Snapchat down 4, DoorDash up 11, Fortinet up 12. Again, Aurora, we looked at their numbers. That's down 6. There's a lot of you guys spamming Aurora. I didn't know that many people cared about this one. I really have not looked into it. How much is it up year to date? AUR year to date. Oh, guys, it was up 80% going into the print. Okay, down 5%. You can't even be that upset. $15 billion company, $1 million of revenue, up 90% year to date. I mean, if you're a shareholder, you really can't be that upset on a down 5%. And then IONQ, they also crushed it, but that pump also getting faded. Yeah, I thought you guys were saying Aurora Cannabis. I was like, okay, we're really back in 2020 now. That's up 2% on IONQ. And then Dutch Bros, how bad did that get hit? Nothing. That's 2%. That's not too bad. It's not too bad. Okay, cool. That's what we have for earnings. Let's get into Technical Wednesday. I asked Jason if he could do today, and he said yes. So let's get right into it. That's what we're going to go into today. We got a few hours where we can really dive deep into the technicals. I know people have been missing it. Redwire just came out. Sorry, Jason. Redwire just came out. Let's do this for 2 minutes. They missed on EPS by 165%. They missed on revenue by 7%. And now the stock is going down. EPS, Street wanted 15. They came in at 4 negative. Street wanted 104 million. Street came in at 97. Okay. There you go. That is what you got for earnings. That is what you got for earnings. I wonder if that Trump quote about bombing Iran before the China visit is a little spooky for markets. S&P after hours, basically flat. Oil's up a little bit. But that is what you got for earnings. AMD after hours, that's down a very little bit. And then NVIDIA, which finally got a little bit of a breakout today, that's also slightly down. So some of the chip names coming down. Even ARM, it was up 11. Now it's up 8. You're seeing some red candles on these chip names. All right, that's what we got for earnings. We'll see what some of these moves look like as well as we get through Technical Wednesday. It's been a week. It is time to get into the technicals. Ladies and gentlemen, once again, it is time to roll the intro. We're live.
What's up? We are live.
Do you know how many people missed you? Do you know how many people missed you, bro?
You know, I missed me too, bro.
Like the amount of people that have you have become a staple of this channel. Like you have all the leverage now. You're gonna start charging.
I have no leverage. I have nothing.
You're gonna literally be like, Amit, it's 10,000 every month. I'm sorry. Like I gotta like the people want me.
It's 10,000. No, dude.
It's like I make that in one trade. Why would I like?
I mean, yeah. Well, that's also true. Or I lose that in one trade. Also true. But you know, I did have a couple losers. Well, one I had a loser yesterday was Arista. Whatever, no big deal. But there's so many winners right now. It's like it doesn't even hit the radar. It's absolutely. Dude, this earnings season, I'll tell you what. I was going through everything last night in our group, and like my group knows, like, dude, it's sickening how much money there is up for grabs right now. It's absolutely rancid. Like it is out of control. And I just don't even kind of OSS, you got like 50 something percent today.
That was crazy.
STRL Sterling, Doximity Digital Ocean. I might have given away a play potentially, but Digital Ocean up like 40%. Dude, Flextronics, not a small company. Like
50 billion, up 40% today.
Yeah, dude, not a small feat at all. And of course, I mean, AMD, like what?
Yeah, dude, to see a $600 billion company go up 20%, that's not easy for any of
Well,
those
did you see NVIDIA today?
Well, I mean, I guess Lisa Su set the standard.
I came in earlier this morning. And I just like poked out and I was like, dude, it's today. It's today. To me, it's today. We ride. I'm ready. I'm ready for the comeback, dude.
Okay, so let's get into it. Let's start with SPY. You got a lot of people wondering. The biggest question I'm getting from everyone is, is it euphorically topping out? You got Tom Lee calling a top at 7,300. So very curious on your TA on SPY. We'll obviously get into your thoughts on the macro as well, and kind of your thoughts on the semiconductor names that have obviously been running and really control this market. 17% now of the S&P are the semiconductors.
Yeah, I think, how do you say this? You have to put in work. And if you put in the work to go through like call transcripts and things like that, it becomes very clear what's going on. And I mean, like crystal clear. And there are some absolute, like, just clear bottlenecks in the market. In terms of semis, what I will say, where do we want to go first? Do you just want to do SPY first?
Let's start SPY and then we'll do SMH, and then we'll go from there.
Okay, so SPY. So we had a little bit of we had actually a pretty solid drawdown. I did not think that this was necessarily over, and the whole time, so this was just under 10% so far. After we gapped, I'm like, honestly, in this moment, I was like, okay, we can come in here, but all of this, I don't even know how to explain. Well, this is a daily chart, number one. The two little, what I would call like lines on my chart, or the three squiggles, the blue, white, and the red. I always use simple moving averages. So this is a 20-day simple moving average for white. Blue is a 50-day. Red is a 200-day. I'm gonna do a little bit of recap since it's been a while. Before then, we had a pretty solid consolidation right up in this area, and literally this moment, whatever we were tracking this, I was like, it could come down to maybe 670, something like that. This was the low end of this support. You can see that pretty clearly, like here, where it was getting bought up, and then eventually you get a pretty solid breakdown and a bounce, like a fake out bearish bounce would actually typically take you to here. But it's at this moment, literally at that moment, where you can start to see, like, it's almost like, can I curse on this channel yet? It's like an oh crap moment where all of a sudden after that, we just start gapping up every day. Gap. And look at these candles. These are just getting insane, because at a certain point you realize it doesn't matter what's going on in the war. It doesn't matter what's going on with oil, which was kind of the bear case. It doesn't matter really what's going on with the labor market even. None of that is going to stop this generational build out from an AI data center perspective, period, full stop, right? Like none of that. Yeah, sorry that happened. None of that is going to stop this. And so I think what you start to see pretty quickly is like the bears start to fumble over themselves in a bit of a short covering rally. And if you're asking me, do I think this is still a short covering rally? Yeah. But does that mean it has to stop? No, that's also true. And I always think back as an investor, there are things like, okay, you could short this from a trading perspective, have at it. But the last few times I've been on the show, I'm like, dude, if you guys know what to look at, if you know where to look, this is an absolute raging bull market. And it's sickening to know that like this is happening. We've been talking about it all year. bifurcated market, meaning like some things are going to do really well, some things are going to do really crappy, and it's not a grab everything and it'll, it's not a slap a couple alphabetical letters together and you're gonna, do well like COVID. It's not that market. That's not this. Eventually, maybe. And you coming into the year, I was like, not super bullish, mind you, right? And I was thinking, hey, look, I still do think that we could have a generational dip buy. In general, was and is my sentiment, but it slightly shifts. So like the SaaS apocalypse, I do think that will be a generational dip buy. I'll just be crystal clear on that. Let me tie off on this before I go any deeper though. So this right here, this is a basic fib that I just pulled up. Right in this level, that's where you're like, okay, from that absolute extreme high to this extreme low. Traders use this all the time. So it's kind of like one of those self-fulfilling prophecies in the technical world where, this is a bullish pullback. It never even got close to that. It's kind of like where we went, a bearish drawdown, bearish bounce. And then from here, we do something called extensions. And to your question does that mean that we're exhausted? I'll tell you what, 7 right here, right now, this is the extended kind of first target in this area between 740 to 730. So are we peaked? I can't say that. Have we arrived at the first, call it profit target? Yes, we absolutely have. And so from here, we don't really want to lose 732. Also Friday, we have NFP. So that's going to reset the market a little bit, but can we go higher? Yes. And at the same time, as an investor, when I look in these moments, and I started here, sorry, I got sidetracked, ADD. I always think, look, we might have a really big pullback, right? At some point in the future, but do I want to sell my stocks? Am I going to be able to pick the bottom? No, because even if we do have a pullback, let's say this goes parabolic, right? And we go through summer and get to 7, I don't know, call it nearly 800, which is on the charts right now. And we have a massive pullback. Well, what's that pullback going to be? It's going to be like to 740, maybe, right? It might be to 710, and that's going to be really bad if that even happens. But as you're looking, when that happens, it might pull back to a spot that's higher than where we are today. So you don't really know. And especially from a long-term investment perspective, dude, that creates a lot of tax obligations, taxable events. You just need to be really, not that that's a reason to not sell, but like you want to be really cautious. Like if you're planning on buying stuff back, even 20, 30% lower, quite frankly, that's not worth it to me. So I think from a software perspective, I'm definitely not calling the bottom here or anywhere close to that. But could we still drop down 20, 30% in the software sector? I actually think we can. And I will be happy to add somewhere around there. And I think if that happens during the eating season, that would be the generational buy. But it's not today to me. I'm not seeing those signs. You read the reports, you read everything. Like that's not in season. From a technical perspective, 730 to 742 is the upside target, which we are in. If we can hold this area, and I'll just do like a little pathing. Typically what we see is this topping action a little bit like this and then hold. Then we're going to get NFP. And if NFP is good, the next range is to 766. And then after that is to 800. That's how you get there. And if the market doesn't meet and I'm out of time, doesn't do the typical seasonal pullback that we see in a midterm election year, if it doesn't, then 800 would be like July into July 4th weekend, which is, it just is what it is. And
8,000 by the 250th anniversary would be a bit crazy.
Yeah. And in the meantime, if we have a pullback literally from here, again, it's still a basic pullback. If we do this, it's still going to bring us to exactly that 675 spot where we were not that long ago. It might feel rough, But one more time, if you sell, depending on what you're talking about selling, if you sell an S&P index here to buy at 670, it doesn't really make, it's 8%, 10%, doesn't really make that much of a difference, especially if that ends up being the bottom again, which you won't know. And it's really hard to buy at the lows because it's scary, right? And most people don't do that. But anyways.
Do you also feel that there's so much build up momentum that, let's say S&P goes from 730 to 7,000, even that would be enough to get people to be like, oh, like I got to get in. It's time.
That is exactly my point. And the only thing, so listen, I live in San Jose, California. If you guys don't know, nobody come knocking on my door, but I don't fill up gas very often. I was driving by the gas station the other day and I saw a $7 a gallon gas in my neighborhood already. I expect to see $10 a gallon gas this summer. I really do. And at $7 in California, if we're not seeing anything major happening anyways, listen, it's $10. And then the next thing they're going to say is like, oh, okay, how long is gas going to be $10 for? Like, first of all, we can never have another 1970s situation. We can't even really have the same kind of Ukraine war type gas situation that we saw a few years back. And we're not just because we're not nearly as exposed to gas as we have been historically. So the biggest thing is like, what is the trickle down effect, which is going to take some time, of AI legitimately forcing layoffs, because every hyperscaler out there is laying people off. That's just undeniable, right? And so even amidst higher unemployment, think about it this way: in this higher unemployment situation, in elevated inflationary environment, none of that, unfortunately, is going to stop the hyperscalers spend. Like none of that is going, they're not going to care. Like, and that right there is kind of like the oh shit moment when you realize that all of the bearish situational historical bearish things that are going on, like even if their stocks get cut in half, which they probably won't, but let's say they do, are they going to stop their spend? I don't think so.
Your point is macro stuff does not matter anymore for data center oriented stocks, because the spend that's your thesis as of right now.
Correct. Hardware oriented stocks, right? Like part of so you think of the model. So like the models are like Anthropic, GPT, Gemini, Llama, whatever. Those are the AI models, right? The brains. Everything that's connected to the demand that our use of those models is generating. So using those models generates a brand new demand cycle, right? Across all kinds of things, whether it's like GPUs are it was the first obvious piece. Now we're talking about CPUs, then we're talking about NPUs. When we talk about servers, storage, networking, then we talk about, to a software layer here, application delivery, things like that. There are components within that stack, and not to mention manufacturing, obviously, right? Like TSM, Amkor, ASC Technologies. There's Camtech. Camtech is nasty, right? Like there's a ton of companies that, like, dude, it's not gonna BESIY. There's one, BESIY. So this is not even. This is semiconductor name. This is not even, I'll just show you the weekly chart. It's not even a US company, but like, I've never shown this ticker here. But I mean, like, you're like, whoa, wait a second, and what do they do? Well, I mean, you guess, right? So like, it's manufacturing markets, semiconductor assembly equipment for the global semiconductor electronics industry. So assembly equipment for semis. Look, I have scoped more than my fair share of data centers, campus networks, things like that. Like I've spec'd out data centers like a ton. But I've never built like I've never built a motherboard. So I don't really know all the companies that go into the manufacturing process, but dude.
But Jason, to the broader point, if gas were to get to $10, you don't think the semiconductor stocks get hit? Like, do you think?
Well, let me challenge. Like, would it? In what world would that affect the data spend, the data center spend?
No, it wouldn't affect the spend, but it would. I mean, I would imagine it would affect the market sentiment, right? If it.
Oh, absolutely. But the market sentiment for certain stocks, like for General Mills, is like, this is no good, right? Like,
right.
I mean, I don't even know. Like, you would go into your staples. There are horrible, even Celsius. People ask me about Celsius all the time. I don't know, right? But like, okay, they report tomorrow? Like, this is not great. This is not a good look, right? Like, there are Lululemon, just random, right? No, doesn't look so hot, guys. You know, I would have to go. We could go Estee Lauder. I don't even know. Not so great. Not horrible. Not the best. But you get my point, right? There are very bearish markets that aren't even aren't even software. So this is bifurcated, meaning like some will do very good and some will be absolutely horrendous. And if you don't know the difference, and if you don't know who's who, you know, you're going to be in a hard spot, right? So like this stock was down, I don't know, 7% today. This is Lumentum down 5%, right? Post earnings. Look at what down 5% looks like. Like, this is laughable, right? Like,
by the way, speaking of down 5%, ARM is now only up 2 after being up 12. App is actually dumping 5. So App gave away a 12% pump.
So there is a common theme, right? And so the common theme that when you listen to the calls, let me just stop this for a second. When you listen to the actual calls, I mean, Lisa Su, AMD last night was very explicit on, there's a lot of shortages, right? So like wafer manufacturing, they're saying that there's shortages on that. And for her, they're raising prices. So what you have to hear for the stock to continue on its current trajectory is not a lot, but it's very explicit, right? Like this is a prescriptive, like this is a prescription that you must adhere to 100%. And if you do not adhere to the prescription, you're not going to get rewarded no matter what on an earnings call. And that prescription is brand new lines of revenue that were not on the existing balance sheet. Like as in new customers, new partnerships, AMD delivered that. It was a basic beat and raise, right? Basic 6%, something like that. That's not why the stock did what it did, right? The stock did what it did because new lines of business, new partnerships that the analysts couldn't factor before, they couldn't model because it didn't exist, which grows your TAM.
Can we look at SMH? Because I get everything you're saying, and it's a 100% right. The problem is when you look at SMH, people don't feel there is an entry into any of these tickers, ARM, AMD, Micron, SanDisk, Corning, etc., because of how vertical it's gone. And so I guess combining your macro take that the semis will keep running regardless of what happens in the macro and the TA, how do you consider someone who wants to enter at these levels?
I mean, so like you could have entered literally yesterday, or not yesterday. This is Monday. So this is the type of market, exactly this type of market that you have to move so fast, and you have to. There's so many opportunities everywhere that honestly, if you're trying to do research, you're trying to like look at macro, you're not going to have time to do that. And because of that type of situation, which we've seen many, many times in the past, we will see it again. It won't always be like this, but it will continue. Like there will be these moments in time where you realize quickly that like all the greats, they're always like invest then investigate. I don't even know who that is, but that's not drug. I don't know who that was, but like that's a common thread across all great investors of every era. It's not one person. And that sentiment is because of situations like this, like puts your foot in the water or whatever, right? Even if you bought on this day, I've had friends that are like, oh, every time I look at the stock that you're buying, it's up 5%. And I'm like, it's up 16% today. It was up 5% yesterday. Like, what's the problem? So like there's those situations, and then they don't get it, right? But what makes it easier is like if you can do a little TA on something as simple as this right here, where it's like a small pullback, and then all of a sudden I have a pretty clean, this is technicals. And so in a technical situation like this right here, just right here, I can tell you that like the second that this was back over 503, it was going back up. And where does it go up to? It literally right here. So can this come back down to 530? It totally can. And it can do this and go sideways for a while. And this sideways moment right here is probably going to look a little something like that, right? And if you can't see that because you don't know how to look at charts, you don't see that. You're just waiting for a 20% pullback. But I'll tell you this much, you don't want to see a 20% pullback in this situation. You just want to, if it loses momentum entirely, you don't want that, because in this situation.
But hold on, why would it lose momentum if your argument is that the semiconductor spend and that thesis is not slowing down?
What I'm saying is that even if this were to come back, like I'll just give you a realistic pullback. A realistic pullback is about 430, which is how much? Like if this is the top, a realistic pullback, 22%, right? Like,
right.
You want then to see some sideways. It would look like this. You would want to see some kind of sideways action, and then you'd want to see it explode that way. But again, a very similar setup to this, you'd want to see over here. And again, if you don't know how to read the charts, you would miss it. But that's exactly what this would look like. And then you could zoom out and you can be like, oh, so I'm doing this fast because like this is pretty basic to me. And I know it's not basic to most people, but this is what we teach in our school, and what we go over all the time. But this kind of stuff is why, and markets just like this, is why I wanted to like, I shifted from a very heavy investment research type of trader, if you will, to a very technical based trader many years ago. Because
so let's go to Micron, because I think that's a good follow-up from this. So, I mean, it looks similar to SMH. Is this parabolic to you, or is this the forward PE means the parabolic nature doesn't matter? What pullback price would you look for? I know you're not super deep into memory, but it is one of the biggest things, right? That is.
I think it's one of many things is what I think it is. So like, I'll restart on Micron. So Micron, I think first of all, if you ever see this with the 20 PE, it's probably time to sell, right? And at a 20 PE, it's probably going to be around 8 something, my guess. Technically speaking, like this, first of all, I've been short Micron a couple times. Literally, when you have this kind of look above and fail, but then in the same breath, Micron had a look below and fell. And this situation here kind of leads to a price discovery moment where like, okay, this is a technical short up here. As a high frequency trader, that's 35% down as a high frequency trader. And then this is not a long to us. We don't long that, right? And we don't long this here. We go long literally right here, where you can see, okay, this was prior support here. Initially, I would expect this type of stuff to be resistance, which it looked like resistance for a minute, but then quickly gap up, hold exactly that point, which it's held here. And then cool, I can at least trade to here. But how we do measurements is kind of like range bound things. And when you go into a price discovery mode, what I can tell you is everyone has specific setups, and this is mine, right? So like I've gone through and I've showed you guys how this works from a fib, using fibs and things like that. I don't want to go too deep into it because it is kind of like our special thing, but this gives me to 640 up to 750, right? So Micron here now, and every one of these kind of pauses, consolidation moments, these are moments when you look at this. This is like multiple days sideways, multiple as in literally a few. Like this is 1, 2, 3, 4, 5 sideways days. 1, 2, 3, 4, 5. Stocks don't have to pull back, but when they go sideways for, let's say, 5 days at a time, they're getting ready to do something next. And then that's when you watch, right? What's the next move? They don't go straight up. They don't go straight down. And this is what that looks like. It doesn't have to be months at a time. Sometimes when you're in a parabolic move, which Micron is, because everyone's like, oh, memory is the bottleneck. It is one of many bottlenecks. It's not the bottleneck. And as long as there's a shortage in memory, which there is, there's pricing power that these companies, SK Hynix, Samsung, like SanDisk, they have pricing power. Their margins can go higher, but at a certain point, if they can't supply enough demand, somebody else will come in, and what you watch for really is their inventory. So like if they're building inventory, period, full stop, that's when things get a little wonky, right? Right now, that moment of them having to have a surplus of inventory of any flavor, it's not even comprehensible right now, which is why you're seeing exactly what you're seeing, right? So would
you buy the chart, or there's no way you could buy this chart at this?
I could buy this at 585 if I saw a pullback like this and I saw this holding here. So when you say buy, I think we need to
let's talk about for a year, definitely not a trade, because most people.
Okay, so you're talking about a trade? No. So this is all momentum from here, and so that's what I mean. It has to hold momentum. But if you're thinking long term, I'll tell you what, 560 to 750, that 35% like this, that's not going to take a year. That's going to take like a week, dude. So like, if you're thinking that Micron here is, so I'll give you an 800 target. If you're thinking that Micron here is a long-term investment, you're going to get some profit. You might see 800, you might even see 1,000, but it's not going to take many years to see that. And then in that time frame, you could be back to 800, and then you're going to have to just decide what you want to do.
Okay.
So these are momentum moments, no question. Are they investment moments? No, this is very much a tradable moment. And personally, it is very hard when the whole market or areas of the whole market are going like parabolic in your face, right?
Right.
And you could get very spread out very quickly. And I recognize that. And that happens to me too. It will always happen. So I think it's important to like, this is again, and I can just speak to me, why I do what I do, how it all came to be, like the origin story, or if you will, is like this exact type of market. Basically, like you have to act fast, and it's kind of scary because it's very hot. Like things move very quickly. So what I will do is like I'll jump in if I get 20%, 30% pretty quickly. I will go in immediately thinking, okay, this is probably a trade, but I'll take a lot of profit on my said trade, and then I'll leave a good chunk amount, and then you trade around a core position, if you will. And every time your goal is really just to build more net shares. On a stock like Micron, I tell you probably 800, right? But like that's this year. So is when you say investment, I think that matters, because some people, when you say investment, that means 5-10 years in the broader context. That's typically what it means, right? At least 3 to 5 years minimum. Anything less than that could be considered a trade. Right. And I think that this, to get to 800, is significantly less than that.
Okay, AMD, what are you thinking about that chart, which kind of looks similar to Micron in terms of parabolic?
AMD, that's my full extension. So like an AMD here. So we had charted this together for a long time, from 227. Do you guys remember that AMD was it was like $2?
Oh,
but recently we did do this. we did do this one together. And then this next leg, literally down here, it was like, oh, okay. Bears had, when you see this kind of situation, it's like the Bears have all the opportunity right here, right? They shoulda, coulda, woulda been able to take this stock down. The fact they didn't was like, oh, okay, we could be going here. 227 was the inflection point. That was this prior, what is that, 2024 all-time high. What these lines are up here is that's measuring what we call like an extension. Not, you know, it's probably somewhat unique to me here, but also not. So an extension is like, if this is the consolidation area, and honestly, this looks a lot like that 5-day view that I just kind of circled in Micron, right? Like it should, but on a much larger time frame. It's so if you want to burn something into your memory of what a consolidation pullback that's viable looks like, it's this on any time frame, where you have an opportunity to break the lows and then all of a sudden you don't. And the measurements are literally taking that exact consolidation, which is just this high, extreme high to extreme low, extreme high to extreme low here. That's the range. And then I doubled it. That gets me to 345. And then for me, like the max is kind of like a triple without thinking that we're going to go sideways for a while. That takes you to 424 spot 80, which is very close to where we are right now. Low, literally right there. So does it have to stop here? No, but I have to kind of reset. And at this point, it's like, if you lose any of these measurements, then I would expect that AMD kind of pulls back to the next one below. But if you look at it, like the only time that's really happened, it's here and it goes to here and then it holds. And then even in this little period, although this is running into earnings, you know, that was it had a pretty heavy implied mood, but it made it all the way through. So
this one you also wouldn't buy in the 400s. You would wait for like 370.
No, I think a lot of these, like I am not interested in buying any of these kind of stocks here now because of exactly what you're talking about. If you're looking here, I think you're right. We're like, you missed the boat. If you're in, I think you ride it and you trail it out, like meaning like you don't let it go too far. If it does, you take some profits, but you let your runners run from a trading perspective. If you're mixing trading and investing, but otherwise, dude, there's 100 other stocks, you guys, that are ready to roll, like right now, like ready to go. Hundreds.
Well, I think the fear that people have is that if the semis start to get weak, all those stocks that you're talking about might not get the jolt of momentum they need if, you know, semis in general are down, right? It might fall 10% in a day.
They'd be wrong. They would be wrong because I'm not talking about like your traditional semis here. I think that a lot of that trade is there's still probably some room to go, but it's largely played out. I would agree. But does it have to reverse? I'm not saying that, right? What I am saying is that it could go sideways for a considerable period of time, especially because what we're hearing on the calls is that everyone is supply constrained, right? And if you're not increasing margins, then your stock's getting sold off, right? But again, where NVIDIA lives is in the hub, the central compute stack, right? For all the AI models. Why AMD and Intel are doing what they're doing is because we're now modeling maybe 1-to-1 CPU to GPU, where it was like 1-to-8 before. So that addressable market has to change. That's only one piece of the pie, right? Literally one piece of the pie, like going out to the edge of the data center. The next piece is the edge extended beyond the data center. When we look at like F5, right? Do you know what the F5 is? Probably not, right?
No, FFIV. Oh, no, you talked about this 2 weeks ago. Yeah.
So like A10 networks, right? These are like load balancers, application firewalls, things like that. This is beyond the edge of the data center. This is the edge of the data center, but it's at the client side, right? Like client side, when we look at NXPI.
Okay, but hold on, real quick. A10 is up 54% year to date. Are you saying that's an example of something that has room to run, or like at what point? Okay, so is it room to run because of the chart, or in general, you think 54% doesn't price in?
It's $2 billion, bro. Number one, 2 billion market cap. Or sorry, that's A10. I think that the total pie is just growing. This is F5. Whatever you just said, if you look at the chart, it's not broken out yet. Like it hasn't started. I don't know what to tell you. Like it's rebounded off the lows, no question, but it hasn't started. It just there's not an argument there because it's not at an all-time high yet, right? But beyond that, this is one of like multiple hundreds, but you have to do the work to find them, and that's why this market's hard, because you can't just go to like you can't just go to your household names necessarily. You have to understand like the whole general stack, right? Like when you build a data center, what goes into it? When you manufacture these motherboards, what are the components here, right? Like there's a lot. I think that the pie is generally growing enough so that all the market caps everyone can benefit. This is TSM. But at the same time, like there are parts, I talked about this not too long ago. This is a shipping company, right? This is last mile, less than truckload shipping company for IT gear, right? Like Expeditors International, it's the same thing. It hasn't really started, but Synopsys software company used to design any chip. Cadence, has this started? No, right? CDNS, Cadence Design. I mean, you tell me, is there room here?
Well, compared to, I mean, it's up 14% compared to the other names. Yeah.
But that's exactly my point.
Yeah.
It's the pie is going to grow. Some of these very stretched companies probably don't need to go like forever, right? Like at this point, I would start broadening my horizons. Someone wants to screenshot the side of my screen here. That's fine. But like,
yeah, so all the tickers that people are asking for, there you go. I mean, Jason talked about a lot of these tickers last week as well, but anyone can screenshot that.
Yeah.
There you go. Those
like,
are names.
And so like in general, like this is daily changes, right? Like Flextronics, you start to think about what are they doing? Like this actually came from here in our group, in your group, right? ACLS was not on my radar until someone actually brought it up, and I was like, they asked, and I thought about it, and I was like, oh shit, shoot. And when was that? That was like right in here, and I said yes, like yes, and it's up a lot since then, which is not that long ago. So like, I think that is my point. This is really, really big now. That look, there are a ton of opportunities, but
So here's another question. You've got someone said today, amid a Rocket Lab $18 average, I'm not going to sell Rocket Lab to chase all these opportunities.
Totally
How would
agree.
you? So okay, but that Rocket Lab $18 average this year, 2026, talking investing, not trading, will underperform the Microns of the world. So unless Rocket Lab has a crazy move, right?
So well, let's be fair here. There are multiple themes at play in this market, and I think space is one of them, right? Just to
but before you get into it, assuming a name you're in that's been stuck, that you have a great cost basis in from 3 years ago, isn't moving this year, how are you thinking as an investor and a trader of that obligation someone has to potentially manage the portfolio, but also to sit back and say, you know what, I did my job. I bought Rocket Lab at $4 3 years ago. I don't need to worry about chasing the next data center.
I feel like you're asking me a fundamental question about how to size appropriately. And like, if you're asking that question, you are not sizing correctly, like positions in general, right? Like if that is your question, you're doing it wrong. And And you should never be fully allocated, and you should never be fully allocated in one or two stocks. That is your logic or thought process. That means that if that's your question, then that's exactly what you are. And that should never be the case. So I would pull that back and say, listen, you have bigger problems, quite frankly. Regardless, you can generate cash with that, right? Like you could do all kinds of stuff. One or two options. Erwin.
If you're full ported options, then it's a different question.
So okay, first of all, options are not investments. I think that is also a fundamental challenge that I would do that. They were never meant to be investment tools. They're not designed to be investment tools. The only thing that gives you real ownership is equity, stock. Options don't. So for many, many reasons, they're not investments. But
to your point, real quick, I think it's very basic. If you're full port Rocket Lab at a $10 average, you might not give a shit about the semiconductor rally because you kind of don't need to because the stock's almost 100.
Right.
100%. But if you're full port and you feel, to your point, Jason, this pressure of not being full port, then you trim and you diversify, right?
Well, yeah. And by the way, when you finally give in to that sentiment, I guarantee you will sell the bottom on your Rocket Lab. like I guarantee you. So I would just say it all begins, dude, size matters first and foremost in trading and investing. And many other things. Size matters.
Okay, let's do Rocket Lab, then Palantir, and then we'll keep going.
So space in general, I would say is look, this thesis for space is not it's not just a SpaceX IPO thing. There are many other catalysts for the space theme as a whole that go through literally 2030. So you're talking Artemis, you're talking Space Force, budget expansions, Department of War, drones, the whole nine, and the entire demand that's created from those things. It's also a thing, but it might not be in vogue in this moment, but will it be this year again? Very likely, right? And if we're thinking investment, you're thinking something exactly like that, where there's a 3 to 5 year time horizon on a full thesis to play out to beyond to building the next space station, which is a real thing on the real budgets, right? And a company like Rocket Lab, just before I really get into this, I guess, when Trump changed the regulations late 2025 to prioritize commercial companies, first of all, why you see Northrop Grumman, Lockheed Martin, Raytheon, things like that, not performing like a Rocket Lab or even an ASTS, that opened the gates for a lot of opportunities. And so that is fundamentally part of the thesis for a Rocket Lab or whoever. But that timeline is not a tomorrow timeline necessarily. Do you have catalysts into that? Yes. You have earnings. Is earnings going to be a big thing? Probably not. If you're in options, you have to understand that options are very inflated, especially around earnings. There are two things that move stocks on earnings right now. That's it. One, like I said, new lines of revenue that were not able to be modeled in the past by analysts. So that has to happen. Two, constrained supply converting into higher average selling prices, i.e. higher margins. That also has to be happening. If you're not doing those two very core things, your stock, triple, quadruple, quintuple beat, I don't care. Raise 4x, it's going down, right? It ain't going up, or it's at least going flat. It's not good enough. The bar this quarter is crazy high. And it's those two specific things that will make or break an earnings reaction on the following day. That said, one day does not make a trend. And a lot of those dips are also getting bought up very quickly, like Celestica. 1 week later, you're already back at the highs. But anyways, Rocket Lab looked good, right? So it still looks good. 66 is support. That is where it is, right? It's on its way. 74 from this low to that high, just a very near term. That's a 20-day simple. This was your box. So about $70 right now is your support near term. If it takes a dump, that's where she goes, very likely. Upside is about 96. If it's probably not, unless there's something like I just talked about, unless Rocket Lab unveils a new partner, a new line of business, a new product, a new whatever that was not in the forecast before, it shouldn't go through 96. But if they do, okay, cool, 110. That's pretty much it for that move. From there, the next move looks a little bit like this into the 130s. But again, I would say that's in there. It's your time horizon on a stock like this. This is over $120 to me, and it's well on its way. It's doing what it needs to do. But the entire range right now is this entire consolidation. This measurement here that I have is literally it's this consolidation from back then. If I were to take that down and say measure the new one, you're literally at resistance as we speak, $84. Any higher, you should see 90. But if it gets through 90, that takes you near immediately to that 120 on some kind of new fundamental line of business, some kind of news. That's where this would go. If not, you're at resistance, expect $70, give or take, to be support near term. And that's the lab of rockets.
ASTS. By the way, ARM is going red after hours, now down 6%.
ASTS. Dude, I gotta say, did you see the Fastly investor deck? Whoever made that deck needs to be fired. Like, bro.
Yeah, we can look at that one after. I literally just saw the headline numbers.
Dude. So
it's being treated like a software company again.
Nah, I mean, well, two things. One, they put this 22 billion addressable TAM 2026. That was mistake number one. Why would you put that there? Right. Number two, their cloud customers that they did. Oh my God. What are you doing? Why would you list these companies? Like, what are you doing, man? USA Today, dude, this IR team, bro, get out of here.
I don't know if that one works.
That was a mistake. Anyways, so here, so I think 77 on ASTS is where I wanted to see it hold. It did not. So when you have this is a little bit of a break. I think earnings is happening soon, May 11th. So Rocket Lab's going to go first. I don't know what these will do. Guessing on that on actual, earnings price action is a guess. But so from here, if this doesn't reclaim 78 very, very quickly, it's currently on trajectory for 55s, which would be a full retest to down in this area. So this here was that prior support. It did break. And so the next level of support is right in here. And so it's kind of like slowly working its way down there. And that would be support. At that point, you could have a tradable kind of range, if you will, and still expecting that 78 to be resistance. But that's what that looks like. And by the way, this is below the 200-day, about here, 50s. About here, if I were to play that forward, is probably about where you would get your death cross. If the stock was actually trading around there, you'd probably get your death cross literally right then, which would be the buy signal, right? Anyways,
right. But that death cross would be a pretty ugly decline to get that.
Again, depends on your perspective, right? Like, does that break the broad trend of the stock? It's very much, if you're investing for a 3 to 5 year time horizon on ASTS, literally this is the broad, this is the actual trend. So that, what I just outlined, as close to 50 as you can, would actually be a retest of the long-standing trend. This is just a loss of momentum right now. And so if that momentum gets lost, it would be down here, which again, I would expect this kind of situation like this. That's a lot of chop. It's a lot of sideways action. So it would get to, base out for a while, maybe go sideways for a month or so. But that's one option, like one way that this can happen. The other way is if there's some kind of surprise post earnings, this will probably quickly go back up to the 80s. And then if it can hold 80, then you're back, your trend is back on.
Okay. Let's do Palantir. I don't know why ARM is dumping. It's taking AMD down with it a little bit. AMD down 2. ARM was down 6. Now it's down 2. So, I mean, there's a lot of after hours action, but we'll see what they said on the call because that could probably be affecting it.
I think Palantir's
yeah, Palantir.
Well, no, I was just saying, I think it's a perfect example, like best quarter ever, right?
Yeah.
A lot of these companies, best quarter ever. Beat and raise, right? But was there, and I don't know this, I'm assuming you'd know this, was there a brand new line of business that they talked about, or was there any margin expansion raising prices?
Margin expansion, yes. Brand new line of business, the way like a data center deal happens for these companies, no.
It's not a data center deal, but it's like a new headline customer. So like Arista would have had.
They had 208 new customers.
Yeah,
like a marquee customer.
So it'd be like a marquee customer.
They didn't announce a marquee one, not yesterday.
Yeah, so like Arista, it's like there's 3 lines of business really. Could have been a brand new expansion on one of those 2, or it could have been a hyper or a Neocloud customer that they've been kind of teasing for a while, which that was the upside potential. They didn't do it, and they didn't raise prices. And you saw what you saw, which probably gets bought up in the next couple of days anyways. So Palantir, though, maybe different story. So what we're looking at, let me hit play. This was prior support here. And I get asked this question a lot. I don't usually mention it, but people ask me all the time, like, what time frame are you using on charts and stuff like that? If you haven't noticed, I'm not using a single time frame. Like I flip around time frames constantly because there is no right answer. The only right answer is that you zoom out far enough to see a substantial amount of the chart, right? If you're just doing like a 2-day view on something like this, like you're not going to see nothing. But here, this is that prior support. I don't know that this holds, right? So like these dip buyers here were buying in anticipation of, let's say, earnings. This group of dip buyers here were probably buying in anticipation of earnings beat. It hit 150 resistance, which was and remains resistance right into here. If you're over that, which we've been talking about 165 on Palantir, that's the higher level of resistance up in here. If you're over 150, you should see that 165 resistance. And then from there, if you're holding like this, then you're back on the mend. But right now you're not, and you're still kind of in this area. So you just don't want to see sub 125. If you do see sub 125, then you would expect lower later this year. And I'm very, very broad on that. Yeah, because this has to hold from here. And if that doesn't hold, then you do have to go essentially from the way back, which nobody likes to do, but that takes you to 114s. So it would take you to 114s, give or take.
Do you think it's tracking IGV as well?
Probably. Same with Hood, most likely. No, it's not. It's actually underperforming IGV.
It's underperforming, actually. Yeah.
Yeah. So IGV is holding the highs, probably because there's some software components that are going to do well. I mean, I listen to the sentiment on the call on Palantir, and it's like you listen to Carv talk, and you're like, dude, it would be so unpatriotic not to own this stock, right? He makes you feel that way, dude. Yeah, I don't care if his audio cuts out or not, but about 128 is kind of like a little sneaky, what we call order block right here, 128.48. I would just echo the sentiment of like, it's it's below this low, which is about 120. Then you see 115, which again, not that big of a deal. But if it does do this and it holds, I would expect 114 to be, I don't expect. So 114 should be the next support, right? That area. So I guess you could call this entire range here support, which basically what I'm doing. So I call that range support. If you don't hold 114, that's when it gets real ugly quickly. But I don't know why that would happen just yet, other than just the multiple. That would have to be some kind of fundamental catastrophic issue for that to probably happen, most likely.
Okay, Nebius.
Nebius. What should I? I'm gonna grab a root beer today. Virgil's root beer.
Root beer in there, dude. I haven't had root beer in so long.
I know. I haven't either. So I grabbed it and I was like, oh, this looks good. You want to do Nebius?
Yeah, let's do Nebius.
Ooh,
This one hit an all-time high. Almost
Hang on,
200 here.
Can I turn my air conditioner on real quick? He's getting hot.
Yeah. Go for it. Guys, Applovin is reversing up 6. ARM is down 6. This is some weird price action. ARM's taking AMD down with it, so I imagine the call.
Don't forget. What do they have? There's nothing but lies and deceit for you after hours. Just
that is correct. That is correct.
That's like my saying.
It's
So
still right, though, right?
Nebius, yeah, Nebius, dude. So she was consolidating for a while until she wasn't. Now she's not. She's in an active breakout. This is a bit of a pre-earnings run up, right? With IREN, Cypher, all the Neoclouds. So perfect example: CPUs, memory, all going up, ripping. Then all of a sudden, a whole new cohort. Not just Nebius. It's not just Nebius. It's the entire group of stocks, industry, not sector, industry, runs at one after the other, and they all take turns. So right now, it's the Neocloud's turn. It's just what it is. This pullback from 160 to 135, this is exactly what I'm talking about. Of like, if this moment right here, that's a buyable dip, right? When you look left and you see, oh, this was the prior high. It starts to stall out. You go sideways for a few days, and then all of a sudden, literally in this moment, like right there, that morning or when it's holding anything in here, any of this, that's when you can start to load. And it gives you time. It gives you like 3 or 4 days, maybe sometimes more. It doesn't happen instantly, but once it goes, it's going. And so right now it is going. This is on track for 214s. So on a basic, which was measured from before, like we had this. So this is, again, if I'm just using this, what I do is like I'm taking this entire area here as consolidation, and you're essentially doubling that. We're about at the 50% spot of this right now. That takes me to 214 on a full extension. Can it go higher than that? Sure, but maximum here is 290 on this move. But that has to be a massive earnings win. And again, not just a double beat. That's not good enough. This is one of the craziest earnings seasons I've seen in a very long time. Double beat is not good enough. Double beat and raise is not triple, it's not good enough. It's got to be like something fundamentally different that the analyst could not like look at on a balance sheet. And I posted that on Twitter. I think that's incredibly important to understand right now. That said, even on this little pullback, if this were to pull back basic to like 165s, that's your trend support right in here. So even if this doesn't extend immediately, like if this pulls back 177 into 155s, and then you see 3 or 4 days sideways, watch it, because after that comes this. So let's say it goes into earnings, just theoretically, into earnings, and it hits 215 before earnings. Then on earnings, it comes out and it dumps to, let's call it 175s. That quote unquote dump, you guys would be like, oh, it's down 20%. That's a lot, right? Zoom out, look left. It won't be a lot. It'll be a long, and you'll miss it one more time. That's what this looks like. So, you know, the thing is that sizing is so critical here, because all the stocks that are in active breakouts, volatility is, the beta is extremely high. So you have to, when you're trading, you have to account for the charts, like typical movement or current movement. And that means that you have to use very wide stop losses. Like if you don't know what a stop loss is, that's like a level at which point your trade thesis is incorrect or invalidated. And so like here now, yeah, the stock is at 195, but I'm telling you the stop is at 155, which is like $40. Like that's a massive percent. Like depending on if you're trading for 250, 300, your stop is at 150 right now. And then if it gets to 220, your stop has to move up to 180, right? And then you just move it up like that. And that's literally how this works. Like this would be like stop, right? This is a stop.
Can we do CRWV and IREN as well?
Yeah, same thing. So CRWV and IREN both, they're in the middle of it. IREN is, oops. Is this locked? This one. It's not locked. Which one of these is locked? That's locked. So IREN, this $30 or whatever here from, this is March, that was primary support. But then within that, and we had measured 42, right? And so we had talked about 42 before over here. 42 to 45 is like, if it's not over 45, doing that, then it's not ready. It became ready and it retested that, right? This was the low lows. And then you have a big pullback. That pullback is literally measured here. That's from this move, this extreme low to that extreme high. That's 42. I actually picked a little bit of this up just because of earnings coming. So kind of figuring, hey, look, you can get a pre-earnings run. So I didn't start the timer. I hope that's all right. And then if I got this run, then the trajectory here is literally this, right? Literally this. So we're at the first target right now at 61.20 as we speak. This would be a day that as a trader, I would trim. I did trim. And if this comes back and holds 53 and bases out a bit, that's a buyable dip right around 53 and a half. As long as it's holding that. And then that would be perfectly normal. It's a lot of percent probably. And people are like, oh my God, the sky is falling. What percent is that? That is 13%. Seems like a lot, but what I was just saying is that, look, these stocks have very high betas, so you have to adjust your expectations of how much things can move one day to the next to accommodate their average daily ranges, if you will. So that says like 75. If it can get through literally right here, right now, it's trying to. This is a resistance. Resistance from over here. If it gets through this resistance, then the next resistance is up here, right around 75. And then that would probably break through eventually. And then I hate to say this out loud. It's incomprehensible to me sometimes to think that this could be $100 stock, but it's a $130 target. If it actually gets through like this to 110s first, it would have to hold, and then 129. If at any point it loses, once it's like this, then you're in a Micron moment, you're in an Intel moment, and you just don't want to lose those levels after that. Like things can pull back, they can have 10% days, 15% days, but you don't want to lose any significant levels once the breakouts start happening, so to speak. If you have a hard time with levels, click a link in one of my bios, and there's a join the group.
By the way, App just lost its second 6% pump after hours and is about to go red for the second time in a row. I mean, this is unbelievable.
I'm on App Advanced Auto Parts. Is this a bearish bullish reversal?
Is Advanced Auto Parts up more this year? Year to date,
it doesn't look like
it is out. It's up 50%, bro.
What? Look at, so that's what I'm saying. Like, that's not how you gauge these things. Look at this chart. You think it's up 50%? Watch this. Think again. Right?
Peak 22, but that's crazy, right? Like, I would imagine Applovin's fundamentals might be better than Advanced, just margin wise, than automotive parts manufacturer.
They're a pretty good operator historically. I don't know.
Do they have 80% margins? Like, it just, I feel this software sentiment, like the street wants to give Applovin a pump, but because it's a software name, it can't. It just can't.
Weird. It's not because of its software name, dude. I'm telling you, you got to really rip that out of the rhetoric right now.
Hold on. Why would you think Applovin's down after, or why is it pumping 10% randomly then going down? Why is Palantir not getting a bid after 85% growth? Why is ServiceNow stuck at 22%
this is
growth,
a software name.
Revenue?
Yeah, but
Jason, this is a sub-billion-dollar company. This is a small cap more than it's a software.
So
give me a real software company that's having a good year. Don't give me these micro caps. Like, I don't, technical, you could tell me for why App is down, but I don't think there's a fundamental reason for why the software names are down.
I mean,
the fact that
technically,
Zeta, 50% growth. Street doesn't care.
They're on here.
I mean, if it's not, I'm open to it's not software. I would just be curious why.
The software names that like I have, like Synaptics and Cadence, like I already
but those are intertwined in the chip space. Those are not pure place like software as a service companies, right? I mean, literally,
they're literally just software. Partnering with them. No, they literally only make software.
Yeah, but when Cadence is doing chip design, even if it's through software, that is much more intertwined with the semi ecosystem than ServiceNow, which has nothing to do with semiconductors. You know what I mean?
Correct. Yeah, I know what you mean. But and I'm not going with just semis. I'm going with like AI, because again, what I've been trying to say is that there's a lot more than semis that are. It will expand to software very soon. I think that's happening next. And I think that that's going to happen in the software names that are closest to AI and the semiconductor stack. So if you want to go into software, my only suggestion would be to get very close proximity to the right sectors, which would be AI and the semis. And if your software does something like that, then I think you're going to be fine.
No, but that's my point. That's my point. Applovin and Palantir are down, and you can give me a valuation as well. But
let's do that.
But my point about why Applovin's down this year, outside of valuation, which is a fair point you could make for a lot of these software names, is that the market is doubting the terminal value of software, even if they're putting up massive.
Yeah, I think that is exactly the point, right? Because it's not just software is also my point, right? Like it's high multiple software explicitly. That's not directly tied to AI. So like this is data.
But then you also have Adobe that's not high multiple and that's dead as well. You know what I'm saying? So that's why to me it feels like it's all software that's just getting hit.
Yeah, Adobe I think is more like your company is getting disrupted potentially, and then you got Anthropic and Palantir, by the way, out there saying we're displacing CRM. So it's like, okay, that's a hard one to swallow. Same with ServiceNow, but like technically you could say Datadog. What is Datadog technically up on the year? I don't know. January.
Datadog is up on the year.
Well, okay, so this says 7%. Yeah, it says something like that right here. But I mean, realistically, off from the lows, which was like sub 100, you're up 50% from the lows. But again, it depends on how you look at it. from the highs, you're also down 30%. So, I mean, I don't know if this is actually going to make it or not. I'm not a big fan of Datadog, but there's a story. I think, like, look, this is one that has somewhat of a proximity to AI. It does not have any proximity to semiconductors, right? None. But if Datadog comes out and says specifically, hey, look, we are now incorporating, let's call it a Palantir-like ontology, because that's what Datadog is, just so you know, right? Like they scan the hyperscalers infrastructure, they optimize things, they whatever, right? There's just a software layer. That's all they are. And we have now incorporated ourselves into this, that, and the other, and we're now growing brand new marquee customers, expanding footprint here and there, like boom, $180, easy day.
No,
right?
I disagree. I don't think that would happen. Like, you already have a company doing that called Palantir. You already have companies out there.
But this is fundamentally the crux of the issue. So you think that Palantir is the only dog in town? I'm saying that
that's not what I'm saying. I'm saying the growth rate on a Palantir and Applovin supersedes even most of the semi companies, and they can't catch a bid because the market is doubting the terminal value of. So Datadog coming out and saying we can do an ontology.
If they did. I'm just, don't play devil's advocate. Like, I'm trying to be devil's advocate. I'm actually on your side. But if we both were to play devil's advocate here and say, what is the bull case, which I'm not a bull, but if we were to say, what's the bull case here, it is exactly what I said, net new marquee customers, because the sentiment is exactly what you just said. The sentiment is there's no way that they're going to do that. And if they all of a sudden did that, boom, that's the surprise. That's a new line of business. That is exactly what would catch the market off guard.
I still can't agree with you there, because I think no matter what the software companies do, the sentiment, it doesn't matter if they have a new line. Karp said he would grow 100% next year, and that wasn't enough.
No, that's not going to be it. That's not enough.
I don't think anything is enough. I don't think Datadog saying we have some brand new product that we're partnering with NVIDIA with. Palantir has an NVIDIA partnership. Applovin is an NVIDIA. Like, okay. I just think sentiment on software is dead. That's my point.
We could totally agree to disagree, right? I think that there are software names that can work here, right? But I don't think this is extremely high multiple, right? Like, let's not mince that one. That's extremely high multiple. Like, if Snowflake came out, you guys are talking about Pure, right? Do you know what Pure's doing? Like, what they're literally doing? Like, why they've rebranded to Everpure? Whatever, if anybody cared to know, the story is that we are a storage play, but we're expanding our business beyond simply storage, and saying that we're adding analytics on top of your storage that you're, by the way, already using with us. And because of this new AI that we're layering on top of our storage, we will then make your operational business like significantly more efficient. And it's going to be expanding to, essentially, you're used to using the word ontology. So I'm going to use the word ontology because that's what you guys know. It's not the real word in the enterprise is called it's the data lake, right? And it's SAP, it's like all that kind of stuff. It all sits on Pure Storage, and Pure is like, oh, I have the new, call it SQL equivalent, Dewey Decimal System for your storage, and we're going to make it a lot easier to like see where you can maximize your business, this, that, and the other, and that's our new product that's going on top of our legacy storage, and that is literally the story here. So like, this is one where like it would be a software that actually does increase their addressable market, if you will. It's in the stock. It's a call option. I don't think this is the stock that I'm supposed to be looking at right now. Sorry, but
yeah, we got to do Hood. But I get the point. I get you.
So Hood, I mean, it's similar. Like, where's Hood's story? Doesn't have it, right? It would have to be, what's their product? Agentic, like, portfolio.
Degenerate gambling prediction markets.
Dude, did your video cut out just now? I totally heard you, but your video looks frozen.
Oh, it is frozen. Why am I frozen? I need
That's
to.
hot. I missed Corey. That's what it was. I'm sorry, guys. We'll come back to that. So while Amit's trying to figure that out, Look, I love my hoodie, and this is one where like I will tell you guys for sure. I own a good amount of Robinhood. It's not the only thing I own, but it's for these moments that like it's not the only thing that I own. It's going sideways. Great news. We didn't dump really bad on earnings. We made it through. We did pull back, but that pullback is to a higher low. I wouldn't get excited about that. Higher low meaning like if this was the last low, this low is higher than that low. And if this was the last high, or even if that was the last high, by the way, this high is higher than both of those highs. So that's the good news. Bad news is I would expect to see a lower high from here. And this is still very much in a very tight consolidation. So I think this is the trajectory of Hood. It is extremely constructive. But I just don't want to get my hopes up. So from here, like if this even gets to 90, it's still not necessarily, it's not good enough. What is good enough is 100. And so if there's a little session gap over here, and I think that I called this out before, I still think this is in play. And it is what it is, but that's all that is, honestly, is just retesting the prevailing, this is the downtrend. And so even if we do something like this, like that, this is going to look, it's going to look good. And so this is my point of this looks constructive into the summer, constructive into 100. It doesn't mean it's out of the weeds at all, because at that point, like a lot of things can happen. It can even break out a little bit, but usually the first breakout gets faded. So I wouldn't do that. I just don't want to see this, right? So this is what bad would look like. I think this can happen here. It's making a higher low. It's at best case scenario, it's going sideways. And that's exactly what this basically looks like. So maybe we do that and it finally comes out of the weeds from here. But this is honestly my base case expectancy from Robinhood. Again, unless they come out with a new product line or something like that, which could be perpetual futures on equities, which is not going to happen in this era. But like if there was something like that changed the story. What's cool is that, yeah, we're going to have the new pattern day trader removed. I think Robinhood's going to be on that within a couple months. And so that should improve some volumes. And I think that holds a floor on the stock for right now, because there's definitely some upside to look forward to. If not, $50 is the downside. Again, not enough for me to sell, but definitely enough. If I see that, it would be, this is one where like, that might be the generational buy. If I saw Robinhood get absolutely wrecked one more time after all this mayhem, I would probably go out on a limb and say that's probably a generational buy. If I saw Palantir at $85, I might go out on a limb and say that's a generational buy for no good reason, right? Just because the market doesn't like, software. So sorry, but I'm bullish there because, dude, take my stocks down. Let me buy some more, but also make sure you have some cash to do it, right? That's sorry, I'm on a rant. This is where I am. The chat wanted CoreWeave. We were supposed to do that.
Yeah, let's do that real quick, then we'll move on.
My bad. Sorry, guys. So from the lows, my God, this is a big win, right? So this is one, again, it's good. It's still range bound. It's not quite done. But it's also not completely out of a downtrend. I like good ramps. And we need to do NVIDIA. So this is the IPO high day, 60 something, held that 1, 2, 3 times, got close, but each time it held right here. So this was your like pickup spot. Again, buying it in the 70s doesn't feel good, right? Like not as a trader, you're like, oh shit, something could happen here. But then you watch the trajectory, you got through 85, then you get to 92. This was that prior high. That was the wall, right? The wall and then resistance. All of this was resistance, all of that. Like that's the wall. And we're actually now beyond that, which is, it shoulda, coulda, woulda been able to do that at 110. into earnings. This is a pre-earnings run. So I have 145 here, the next upside. This is probably good enough for now. A pullback into 126s should be expected. But again, something like this, holding and then doing that is fine. If CRWV is at like 126 when it reports and it doesn't do well, I mean, this could be ugly, but I would say about $100 is your support area, right around your 200-day simple right now. It is an active breakout spot. So this is a spot where you could see 2-3x standard deviation type moves on CRWV, assuming that earnings does well here. And I think that's what I expect. So 145 upside resistance, 126 is trend support. It's not hard. It's not strong support. It's just the trend support. Below that, you're looking at about the 200-day simple, which is around $100.
ARM is down 10%, by the way.
Cool. If this breaks out, I mean, obviously you're 200 next, but I will give you a full extension. It's 250. And the 250 is here. If you have like a massive parabolic move, that's where this goes.
Okay, NVIDIA.
Okay, NVIDIA is like the setup into the setup into the setup. So like it's very wild. So like this move in here, I guess people don't really care where we are, but like today's move, like off the 20-day SMA, I think most of the hyperscalers and competitors have at this point now reported, and we're moving on to smaller names down further down the stack. And there's a lot of read through. Look, everything that you hear on all the calls is still bullish NVIDIA. So I don't really care what they say. Like it's actually still bullish NVIDIA. I think all the TPUs and all that kind of stuff is like call options and CPU expansions. Who knows? Vera could be. What could happen is that NVIDIA comes out and they're like, I don't know why everybody's celebrating everybody else, because Vera is our CPU line and it just 10x, and NVLink just 10x, and Spectrum X just 10x as separate product lines that NVIDIA all of a sudden owns the stack. And that's what would take this to the 240s. But I'd say pre-earnings, this has a shot to get to 230, believe it or not. And that is if it can get through 210. There's a tiny itty bitty gap here, 218, that was left as a little messy spot. Interesting enough, if this can get, this is on this single moment right here is overhead resistance. So if it can hold 206 right now, then you should see 210s. And if it can actually get through 210s, you're going to 218 and likely into 230. And it's in that order. So today was the first moment that was important. Big move today. This is exactly like, when people look at it, it's like, oh, the stock's up 5% today. Like, and it's NVIDIA. This is how it begins. This is literally how it begins. So like, if this can hold, like I say, into 210 after a 10% drawdown, it's already recovered about half of that drawdown. If it goes any higher, anybody who shorted over here is done, right? And that is how this happens. If they caught the top, I shorted the top of NVIDIA, right? Whatever, right? If you go a couple dollars higher on NVIDIA here now, this moment, that is how a short squeeze begins, because everybody here who shorted that, they're covering, which means they're buying, which means the stock goes higher. Full stop. Otherwise,
Julian, by the way, thank you for the super chat, man. Super appreciate it. Very kind.
June, you rock. Otherwise, if it doesn't hold 206, look, it still has more chop to go. But regardless, because most of the direct competitors or like near peers have actually reported already, I don't think it's I'm more bullish NVIDIA here now than I was the last few days, not because of price action, but because of what's to come left in earnings season. There's not really anybody that can, everybody that's left will just be bullish for NVIDIA, no matter what they say.
And you think the fact that it hasn't rallied with the other semis is probably more breakouty versus toppy?
No, I think it's the last man. It's the you're trying to make money, right? We just spent a bunch of time going through a ton of charts, and I think most people will look at the charts that we just looked at and say, "Oh, AMD's gone too far, Intel's too high, Cisco's too high, Micron, SanDisk gone too far," and they're going to be like, "Oh, well, NVIDIA still at 40 yet," and it's going to happen just like that, and it'll be a momentum breakout, and then it'll be solidified on earnings. But that, to me, that the price action that I just showed you is like how a squeeze would happen. If this is below 200, then that whole play is off the table for right now. But I still think NVIDIA at the end of the day comes out and does the thing. What's funny about this quarter is that, again, it's been one of the craziest quarters I've seen in a very long time. NVIDIA has not participated in it really. And all the celebration has been around CPUs, NPUs, client-side edge, very far out edge, custom silicon, all the stuff that you would think is competitive to NVIDIA, which is why you're not seeing NVIDIA move very much. And then NVIDIA might just come out and say, I don't know what they were talking about. You know what I'm saying? Like that's how I would see that going down, man. But the chart does not look bad.
Intel, can we do that?
So, yeah, just to tie off. Like, so if this goes, so first you have a first look above. You don't want to see it fail here. If it continues, we're off to the races. First stops 230s, full extension is about 260s post earnings if that continues. All right. So what was the last one?
Intel, and would you buy the breakout on Intel here?
Well, I did buy Intel. I told you guys I bought Intel, but
But you bought at 60, sold at 80, I think was your trade.
I bought at 42 and I haven't sold.
Okay. All right. You're in.
So Intel, so NVIDIA is very much currently right now. You like how I did that?
I do like how you did that. I do.
Very much in an Intel at 42 setup. Not to say a whole lot other than that, but NVIDIA right now is exactly at an Intel at 42 setup. And it is, you know, if you're just looking at this, I'm trying to clean this up so you guys can see this. Goodness, this is a daily chart. And if you're just looking at this whole scenario here, this is like an Intel chart or NVIDIA chart off 65, whatever. And it's the setup inside the setup at 42, which was here under the 20. You have a 50 days, simple moving average kind of squeezing up beyond. That's, I'll call it there. It would be a parabolic setup. But Intel here now, I think, first of all, is finally green. And I need to switch this to an extension. I have 119. So this is ultra parabolic. I would expect this. I mean, you know, stocks that go through 70 go to what? We're not quite there yet. But we're close enough. I think this could actually pull back as long as it holds 93, which, like I was saying, is here. 120 is next. It's on deck. If it can get through 120, it's to 140, maybe 150. But at that point, that would be the final like extension to me up to that area. At that point, I would expect it to get even choppier and potentially do that, but that's not till like way later. This is like, and this whole re-rating is not even, it's not a re-rating. It's an addressable TAM thing, right? Where again, before we were just talking about, you know, what was the ratio for every GPU, for every however many GPUs they thought there was going to be one CPU.
Yeah.
It was like 8, and then it was 4, and then and now it's like 3 or some 2, or maybe now it's 4, and they're talking like 1-to-1 ratio. And that is not, it's not even like, it is a multiple expansion in current moment,
but it's an addressable TAM expansion, which is why we're seeing what we're seeing and why the stocks are moving the way that they're moving, is because like if all of a sudden we're talking about building out a bigger edge, it's large. So got to hold 93, upside next 120, potentially 150. That's very toppy, but that's how she goes.
ARM, by the way, still down 5% right here. Can we do, so we did NVIDIA. Oh, we got to do Meta. What are you thinking about Meta and Microsoft?
ARM looks like it's going to get bought up right now. By the way, so like, see this moment? This is that same, this is a very small time frame chart. Again, I flipped through all kinds of time frames. You're looking at this. If this holds 210-ish, how that plays out is like it's a cup, it's a handle, and you're off into the races. So yeah, I wouldn't even worry about it. So what do you say? Sorry, Meta?
Yeah, let's do Meta than Microsoft.
So Meta, not so much. So Meta, you got to remind me on this on the clock. I keep forgetting. So the last kind of move that we measured was from here to here. I think we got to 595 right in this area as support, right? So this is your support. It lost it initially, came back down to 520. I'll just tell you right now, this is not a bullish chart. Once you get that, what you do is you kind of like, you go through and you do, okay, well, that's the bullish retracement. Every good bull knows that their bears are out there, and then every good bull needs to know where the bears live. So the bears live literally right at 690, and that's basically where it stopped. These red boxes are resistance, and the green box here is support, essentially. I'd say like support can be a whole area right now, and so it's more or less trapped in this zone between 690 and 585, and that's honestly exactly what I expect it to do, is kind of go nowhere, and for the range to get considerably tighter from here on Meta. So I expect absolutely nothing from Meta. I expect this to go sideways for a good 45 to 60 days, maybe 90 plus, until it finally breaks one of these very wide edges, which is again below 585 or 690, 700, call it, for the upside resistance. If that happens, I don't know, they may not like me if I say whatever, but like, just so you know, Meta is not, it has made bigger drawdowns than this in the past many times. It's 440 to 350 is your real support, which I would be buyer, and I would consider that a generational buy, period, end of story. And that would very much align with real support, very real support over here. All of this, anything under 500, call it. That's a legit breakdown, but we're not breaking down yet. That's not in the cards here now. That has to be something existential that's not in the chart or not in the fundamental story right now. Right now, it's consolidating. It's going sideways, 690 upside resistance. And until it breaks out of that, that's where it goes. If it does break out of 690, then I would say you're back on your way to $1,000, ready to roll. So long story short, it's a wait. One of these two borders is going to break.
Okay. Microsoft. I feel like you would think it's the same kind of.
It's similar. So dude, so Microsoft's, you know what Microsoft's missing?
What you're asking me, what is Microsoft missing?
No, I said, you know what Microsoft is missing is custom silicon. So like if they had their own TPU equivalent,
that is true.
I don't know why they don't have it, and they're supposed to be working with Marvell, right?
I mean, they announced something a while ago.
That's what I'm saying.
Yeah.
Like, so that's the bull case to me, is that like the market ain't thinking about that, and I know that they have that in the works. So
hold on real quick, by the way, this is why ARM's down. They kept their near-term CPU revenue outlook unchanged.
Bingo. And why? I guarantee you, supply chain constraints. And if they're not increasing margins in the meantime, it's not going to be ideal. And that is that right there triple, quadruple beat, raise, 10x expectations, doesn't matter. It's literally that story right there.
Yeah. That's fair. Yeah, Microsoft, good earnings, Meta, good earnings, both fell 10%, basically. And they haven't really recovered since.
Yeah, because the read-through from a market, just from a business perspective, is like, if you're raising margins in a supply-constrained environment, which we all know it's a supply-constrained environment, if you're raising margins, that is equated to a sign of strength of your business. And if you're not raising margins, the market's just automatically assuming that that's a sign of weakness. And if you don't have pricing power, then what are we doing here? Literally, it's that fickle. But that's the story. So anyways, resistance around, believe it or not, 450. I think that this custom silicon story for Microsoft that is not in the chart would be the O moment. Technically, it is at support. What I'm talking about right now is total pipe dream. So I'll be straight up about that. Like, I have no idea. I'm just yapping. But look, it's got to get at least to 460s. Resistance is all the way up at 490. So a basic retracement from here should take this to 490. It should. And again, in the meantime, as long as this can hold, I'll give it to you. Actually, it held. So this is somewhat bullish. So near-term support is higher than it was before. So before it was in the 380s. Now it's 400 to 390. So support is actually risen. That's bullish. And we just want to see it continue to rise. On this, if this breaks, it's probably you're seeing a new low. You're probably seeing 330s. But again, I don't know. I don't really care if it sees it. I bought this green. I'm not like big green, but like this is one where I think my sentiment has been, I think Microsoft is a good dollar cost average, but if you're looking for it to be a parabolic mover from here, there's no sign of that. So like I was buying over here, and with the sentiment of like at least 6 to 9 months of sideways price action. So I think selling puts is more appropriate on this one to me. I wouldn't necessarily sell calls because it's set up where like it could potentially do it, but I don't have a reason. I have a pipe dream of why it could happen, but I don't know what's going to happen.
So let's do Google then, which is making their own chips. I mean, I did not see this going vertical on earnings because this was actually at all-time. It was funny. The all-time highs went to new all-time highs. The Metas and Microsoft's.
Yeah, I think my sentiment too was like Google's probably the most at risk because it's been so perfect, but continues to deliver, doing exactly. Again, it's like the new lines of business, the new expansion that wasn't really in the models before. That's what has to happen, and they're there, right? And it's not because of just cloud revenue. That's the difference. Microsoft grew more in dollar terms than Google did from a cloud perspective, from a hyperscaler perspective. Google is a redheaded stepchild in the cloud space. Just so you guys know, sure, they'll have massive like growth rate percentages because they're coming from near nothing, literally nothing. So they're going to hit that wall sooner than later. Microsoft and Amazon are already at a mature level. Google's just trying to get there, and that's been their story for a long time. But the difference is that they have a new product line. They have a ton of new products that they're offering. They're firing on literally all cylinders, and this is the results, right? It's not because of their hyperscaler growth. So I think that is implied, right? It's because of their AI growth and everything around that, custom silicon, blah, blah, blah. So 400, yes, big round psychological number. As long as this holds 387, this is intact. I think it can chop between 400 and 387. If it holds that, it's 425 next. And that's literally what was in the chart. From here, again, I already had this outlined because it's, like I was saying, it's literally that consolidation doubled, 426. Triple is 500s, but that wouldn't be for a long time out. Ready.
Okay. Tesla.
Tesla. No custom silicon yet, huh? Soon?
No silicon yet.
Coming though, right? No?
Well, with Intel, maybe.
I don't know.
I don't know.
But that is the qualifier, right? That is literally new product line. Exactly what I'm talking about. I mean, 415 is the number. It is what it is. It is, has been, always will be. Literally 415, October 21 highs, the breakdown of January 2025, the breakdown of the breakout rather of 2025, and the breakdown of 2026. All happens at 415. That's the inflection point. So close, not quite. 409, reject, holds a bullish retracement here at 370s, 365. Last time I spoke with you, you asked me what I thought Tesla was going to do. And I said, it could go up to 315. I remember this. It could go up to 315 and I wouldn't buy it, but I would expect it to come down to 365, or it can go down to 365 and I would expect it to get bought right up. It did neither, but eventually it went down to exactly my number at 365 and got bought up. So there you go. But now we're on our way to 415. If it can get through 415, you're at an inflection point. Something's happening. There's a other story. And at that point, I'll tell you what you should expect.
But you wouldn't be buying Tesla.
445. No, I think you could buy Tesla here. Like if there's a storyline here, I think there's an accumulation going on, right? And so an accumulation here, right, is exactly how that happens. And so the prevailing downtrend from here, 2025 to here, this downtrend has broken. 365 was a perfectly clean retest here. Also, 365 was a perfectly clean 50% or like technical retracement from the swing low of 337 to 410. That's how that came to be, because I had confluence between all those. I think it's also a simple moving average. This is the beginnings of, it is the 20-day simple moving average right here as well. So I think this is in a consolidation mode. It wants to go. So it's going to need a catalyst. You'd have to look at the calendar. Tesla is a story stock in terms of like, it needs a reason. And so once it has a reason, it'll be ready to roll. I don't know what that reason is offhand, but this is, if a reason were to show up tomorrow, this is primed to run. Does it have to? No. But if there was a reason that showed up tomorrow, it has a run into 440. If it got through 445, she off to the races. But it's a little ways from now. Tesla could make that move pretty quickly though. But so you just got to keep your ear to the street.
Broadcom.
You think NVIDIA takes her down?
I just feel like if this market is so big for everybody, you know.
I think that's the realization. It was like, look, I thoroughly believe this is our generation's industrial age, literally. And you know, so for those reasons, I really don't care, you know, 20%, 30%, because like if you have that mindset, a lot of these things could go for a long time. But this is an inflection point. So right here, we'll call this like acronym is like BOS, or break of structure. So we'll just put that right there, 425. So a little break. Initially, this is a look above, what we call a look above fail, but it failed to like an existing trend line and right around the 20-day simple and right around prior support, very small support area right here, but trend support, that's what that looks like. Then you make another high. If this holds literally where it's at right now of that high, this would be how that happens. And I mean, dude, I wasn't expecting this to go down like this. When I picked this up recently as a stock, it was like sub 300 or right around 300 coming out of this area. And you're like, oh my goodness. So real support is around 350s, just is what it is. but a breakout can take this into 5s right in here. So that's trajectory of a breakout. It's sitting on the edge as we speak. So this, even a few days sideways like that, anything in here that holds around 400, this is still valid into 5s. If that happens below 4s, she's off. And then she's going back to 350, 340.
So you like it here with all the other chip names, basically.
Yeah, so this is a trade. This is not like an investment spot. This is a spot where momentum could easily pick up and become an active breakout, meaning like a 2 standard deviation move into earnings. Like I look at this catalyst setup and I'm like, oh, okay. I didn't realize this, Amit, but they don't report till June.
Yeah.
So yeah, I think this happens. And so when I look at the stock market like that, I can say, okay, well, look, any pullback into the 400s on Broadcom, consider viable for a trade into 5s on earnings anticipation. You got to call that. You got to close that trade before earnings happens, or hedge, right? Like, so Fastly, perfect example. I was long Fastly in the low 20s. Today, we trim a lot, right? And yesterday, and hedged before earnings. You have to do that because when it comes down to actual earnings, expecting the stock to go up or down, dude, gamble, right? Like gamble. You don't know, right? You can know that it's going to beat. But I'm telling you guys, it doesn't matter if they beat like the biggest beat ever, have the best quarter in their history. By the way, Arista had the best quarter in their history ever, right? But what did they not do? They didn't do exactly what they need to do. And for those reasons, stock down 15%. We can look at stuff just, by the way, Celestica, good stock in the stack, right? You look at this, oh, okay, earnings comes down, stock down, how much? Post earnings, 17.75.
Yeah.
Where's she today? All the way back, right? You remember Rambus?
Yep.
25%? Something like that?
Yep.
What's happening right now? Wait a second. Wait. Is this the right? Cannot be the right ticker. Or I'm like, no way. Did I just find something? But what's happening right now? She's reversing, right? Potentially. Already taking back half of that move that quickly. All these names are exactly like that. So like if it's not, what's monolithic power? MPWR. This power semiconductor, dude, earnings here. This is the candle 17 all the way back, dude. She's reclaiming, right? So like, I'm just saying there are certain stocks that do this, right? ST, Sterling, infrastructure, commercial, like construction. Oh, it's just another double. There are stocks like that. And there are stocks that do down 20%, however much this is. This is chemicals. It's in the stack. 28% down, doesn't hold the lows, right? Arista, we'll see. Yeah, I'm just looking at this. It's not even that bad. What happened to TSM just now?
It's probably down with ARM and the rest of them.
Yeah, no big deal.
Yeah, no big deal.
So like, I think my point is this: you don't have to gamble on earnings right now. Like, you really don't. Like, earnings is a crapshoot. I think you have time to wait till after the dust settles. Like, you want to gamble on earnings for Nokia? Here, it goes nowhere for 1, 2, 3, 4 days. You had 4 days to step in this before it did another 30%, right? Like, yeah, I can relate to people that want to, but you know, the truth of the matter is, like, what is almost like near certain is these like earnings run-ups. So like the run-up, here's the run-up into, we just looked at Broadcom, the run-up into Fastly earnings, the run-up from here moving forward into NVIDIA. Like those are into Astera, and Arista. The run-up into Astera Labs, right? From, I've always said this to you guys, about 2 weeks beforehand, So that's a month out right now. Arista bottomed, or Stera bottomed around 97. They're run up into earnings. That's that. This whole thing, if you can get the chart to align, that's your highest probability trade. Everything after earnings, total gamble. And I don't like, I trim into earnings, then we hedge before earnings if you want to hold something. We will talk about Arista. That's literally 115 into 180, right? So like there are still a lot of companies that have to report about 30 days. 30 days to 2 weeks ahead of earnings. DigitalOcean. It's not that it started that day. It's that it literally started at 70. And by the time earnings hit, you were already up a double. This right here, 50%, that's high probability setup. You don't have to gamble on this because this you don't know is going to happen. This I can't even comprehend this. Legions. Okay, 79 to 104. There you go. One more time. I'm going through a bunch
DigitalOcean too. Some of these moves are just like, it's almost like the street fully did not realize the company they were analyzing to have that type of a re-rating.
Oh yeah, for sure. Keysight Technologies happening right now, right? Like probably not talking about it. Doesn't report until May 19th, right? It's a couple weeks out, but like this next very last leg of this extension, dude, it's a given, right? Well, okay, so sorry. This is actually here. So this area potentially, if it goes over 368 to 400, like you're there. Before earnings. Now, what happens after earnings? Again, if there's not a new line of business, if there's not like increasing margins or whatever, Keysight's different. It's tooling. On semiconductor, look, already reported earnings. Dude, this thing was down 12% that day. It's already up. I don't know what to say. So, and by the way, that wasn't the event. This is earnings. The easy money is all of this, which happens way before. So if you're not looking at names that don't report, you need to be looking at names that report a month from now. And if you can find the names that report a month from now, when does Oracle report?
Definitely a month from now.
There you go. Literally a month from now.
Can we do Oracle real quick as well?
Yeah. So literally right here. So like this is a break. You just made it over, break over. So here is higher than here, right? Like that's what I'm talking about. It's still technically a lower high. This is a tough one because it's software, but all the Neoclouds are also running. So this is about time when like, look, you're any like major people they're going to have to stop selling shares for a while. This is, oh, brother. Is this a trade? Do I need to do this? See, thank you guys for like getting back on track here because this is the kind of stuff that we're looking for. But, bro.
Well, people have been saying 250 on Oracle for a minute now.
Yeah, it's 250. This becomes a heavy watch, right? So like what I would say here now, if Oracle can hold 174, a basic pullback would look like this and consolidation because you're still under the 200-day. But this kind of trajectory leads to this, which leads to this, which leads to that before earnings. That's the path. That's pathing. So here now, I would look at Oracle. Either it holds immediately 190 and continues to go like literally now. That's option. That's an option. It's not the preferred option since I'm not in it. Preferred option would be, okay, we get into low 170s, holds, break structure, and then rip into the weekend. That's selfishly my preferred setup. That gives you a little, it's this little inverse head and shoulders, which exactly gets you here right over the 200-day. Give it a couple of days to chop, and then one more right before earnings. Get the out, right? You're done. Trade's over. before earnings happen. So that's how this works. That's trading in a nutshell. Trade into the catalyst, sell the news event. I don't really care what happens post earnings. Buy the rumor, sell the news. See you later. Bye.
Can we do SanDisk?
Yeah. Sorry, but that's trading. SanDisk. So can I do? We don't need 10. We don't need 2.5 minutes.
Yeah, we
right?
have like a minute now. Yeah.
Oh.
We're gonna be done in like 15 minutes, and then we'll try to do as many.
I don't even need to. So just hit me. So SanDisk, you're over all the extensions right now. What? Yeah. So it's a pretty like basic day, basic pullback. So here, this is extended, right? I would expect this to hold 12s. This is like 1, 2, 3, 7, $1,237. If it can't hold that, then you have ranges that take it here. It's not a short here, unless you're just shorting to that, or any of these. So these are the trajectories here on SanDisk from this last move. But again, break up clean. You're fully extended. This is where I would say, look, typically time to breathe. Sell some $1,500 calls, something like that. But don't let it get over. If it does get here, don't get it. Assuming it breaks down below 1370, you're probably going to see a 12 handle on it. You don't want to see it over 1410. If it breaks down, it goes to 1230 and then gets over 1410, then she's going for another leg, and that leg would be higher. A full pullback, it's be harder to measure, but yeah, like a full pullback is probably closer to literally that $1,000 mark. And then if that's the case, it would be pull back to 1,000. Then once it's over 1,350 again, it's essentially the same kind of situation. But this whole box is where she could chop right there.
SoFi.
SoFi.
Do you have any even interest in a name like this now with this?
SoFi? I've never really been a SoFi guy. I don't not like it. I'm just like,
SoFi's down 40% this year. You'd rather buy something up and moving, not dumpster diving right now, basically.
It's not dumpster diving. It's like, I'm a trader. So like I would rather buy something. If I'm going to put new money to work, I want it to be an active move that's like moving. I'm not into slow appreciation. Like traders we're not into slow appreciation. We're into like, show me my money now. So like if it's moving, it's moving. Trade that's not investing, right?
Right.
So it's a very different mindset. SoFi is in, it's Robinhood, so it's holding. It's not as good as Robinhood. I'm just not into banks personally, unless it's like regional bank kind of stuff. No, this is not a good look. If this were to get back over 17.5, then I would be interested in it. So that's how a trader is gonna think, right? So like if this is doing literally that, it would be at this point right here that I would buy it. I would not be diving here. No. Like I would be doing it higher, literally right here, because this, just telling you right now, is your inflection point of when you're at least gonna get this move, and that move is 15% in very short order. Just like how over here I said 16 to 20 in very short order, I'm in for that, right? So a trader is in for that, not investor. They're in for this. 5 days, 25%, sign me up, baby. Right? But like that's what I do. Like that's what if you're good at trading, you're good at finding these very explicit like inflection points of when stocks can make this move and have made this move in the past. You identified this, you create a trade plan around that. And 25% in like less than a week is damn good. Like, that's really good. That's better than anything else out there on any stock that you're like. And if I can replicate that 100 times over, yeah, I'll do that. But that's not what I'm seeing.
Fastly, I know we haven't looked at the earnings, but
Yeah. So Fastly, look. So I hedged a little bit. 22 was the downside for me. I think we literally hit that right here. I think that is support. That was prior support here. So I think this is okay. I would not touch this tomorrow. So we look at Arista, by the way, all of these names, for the most part, all of these names, you just let the dust settle until the very last few minutes of the day. And when you see a little something like this, and you're like, huh. Oh, Arista, by the way, is to like 140 to 137. That's downside. You see this in 1 hour, a 5% jump at the close. You're like, okay, pique my interest. So wait for the last hour of the day, then come back and look at Fastly. No reason to like jump ahead of this. If it's over 24 tomorrow, it's actually pretty good. You're right into your SMAs. So this could technically go either way. I didn't listen to the call. We've been on this channel. I would listen to the call. It doesn't look horrible, but they need those new marquee customers. And at a $3 billion market, the problem that they have a couple issues on the investor decks that might, make some people steer clear of this. So I wouldn't hold my breath. I like the thesis, but there are other plays. Akamai is a secondary one. Does have they report later. And then I think Cloudflare is really probably like your winner, but it's not. So they all do CDNs, but I think, when I thought about it a little bit more, it's not just CDNs. I think CDNs are part of it. I like Fastly's business model. I think that what I didn't hear, because I can't on the transcript, they're probably finishing up the call right now, is about the AI accelerator product that the new CEO basically created and is now bringing to market, which I think is pretty cool. He's the old SVP of Cisco Networks. Now CEO of Fastly, was senior product designer, built this AI accelerated product. But I need to see more customers. I need to see bigger customers, and I need to see customers that aren't dying on those investor decks. And that's not what I saw. But net margins growing. I think AI acceleration is like a given. And I think that this is their investor. This is good, right? Like that. So it's good, but the thing is, it's not necessarily good enough, and it's not, again, what the broad market is looking for. They're pulling down their debt. Like they're making more money. They're spent like.
I think their guide wasn't as good as DigitalOcean's. I think that's the only reason.
No, yeah,
that's not the reason.
But yeah, but when you think of like what is going to make this grow, I need to see a hyperscaler on here.
Yeah.
Straight up, that's what has to happen. I need to see a hyperscaler, or I need to see a Neocloud. One of those two things, exactly that kind of thing, is what will take a stock like Fastly to the frickin' moon. Boom, one and done, right? And that kind of stuff, though, is not what you're ever going to see on the existing financials of the companies. You have to listen to like executive commentary all over the place. But when that happens, if that happens, you're good. You're probably golden. But it's kind of a sentiment guess right now.
Oscar.
All that said, all the cloud names are getting that said, all the AI names are getting bought up in the following week. So like I said, I would not dismiss it. I wouldn't get too caught up with it though in the morning. I would check back with it at the end of the day and then watch it from there. This actually does not look bad. They just reported right now, literally just now. Let's go.
They did. Oh, in the morning they did. Yeah. In the morning.
Is this the morning?
Yeah.
That's not bad. This is not bad at all. It is right at resistance. So if you get follow through, here's the thing. I give you. So I've said this before. I can systematize this. To me, it's I'll show you this on Qualcomm, but you get one shot from here to make a new high. It's simple as that. So you have earnings I would almost say, I think you could back test this and say earnings is a fundamental event that will create a technical level in the future. I think you could back test that. Low of 1850, high of 20s. That is actually measured from here, this extreme high to this extreme low down here, already at technical level that was in play from here to here. That was already in play. This happens to be the extreme bear zone. So if you get a couple days closing over $20.39, I would say in very short order, you're going to $23.50 if that happens. So trading is if this, then that. So this is the if. The if is if you get it 2 days closing over 2040, maybe 2 to 3, you go straight into this area right here. If that holds, the breakout is into the 35s. I have no idea if that is even in the cards. This is totally technical. And if that doesn't happen, no problem. The consolidation is down back to 14s yet again, where support remains in here. If this doesn't make it down there, it's possible that it just holds to 18. If it just holds at 18 and does this, that's super bullish. Like I would say that would be the most bullish setup like this. And that is exactly how you would get up there to let some new investors come in, but TBD on that. So what I was going to say about the earnings thing is post earnings, which I think is easier trade than pre earnings. So Qualcomm big move post earnings, right? So the high on earnings is here. And usually I'll just take a basic measurement, like, so from the earnings low to the earnings high, and we'll get a 50% retracement of this. I don't know if you saw my post, but this is how I did that. We were already long swings for a while, but then happened to catch like a day trade on this that was like stupid. Still going, obviously, well, close to. Like right here, there's a 50% retracement of that earnings move. If the stock can hold that, even if it doesn't crack the first time, it has a shot to have a continuation. So like, just do that. Like earnings high to earnings low, grab a 50% marker, give or take. If it can hold that, I would expect this stock to at least be able to take a solid crack at breaking the earnings highs, which is here. And if they do, that's how this starts. Like if they do, that's how the news cycles begin. And that's exactly, go back to whatever you want. Breakout here, right? So like, this is, where's the earnings? Breakout here, second, chasing, 100 something. Here you go. Earnings breakout. Day one here. I don't even know if this gets through. Oh, no, it's not there. It's from here. It's a 50% move. That's exactly what 244.60 is on Micron, measured exactly the same way. Your stock holds that, and then you can break through here. That's the beginning of a new run, an entirely new run. And that's at 263 on Micron. That created this. So there are stocks that are actually in that setup right now also. Just so you know.
Amazon's a big one. People are asking us, well, we'll do a couple, then we'll
yeah, we can do that. Post earnings, not a small deal. Like, okay, so Amazon, here's the earnings. I don't know what they did here. See, there it is. So I can systematize. That's the word. I think that's how you call it. The earnings candle, absolute extreme high to extreme low after the company receives the print. God, this is stuff like you guys are getting, like, I've already backed to this. I shouldn't even be telling you this. This is like my stuff. Don't steal it, okay? There it is. There's your buy, 265. You at least get a shot to crack the highs. That's what I'm saying. So that's at least a shot to 277. Now, look at that. I mean, if it can get 2 to 3 day close over 277, it's 290. But that is exactly how people be like, oh shit. how it's 300 plus. That is exactly how the new move begins. This little consolidation, which can take up to 45 days. If it doesn't break through right now, which it's having a hard time, if it doesn't make it, I would expect Amazon to go sideways for like 45 days. But I would also expect this area around 255 to be honestly your support for a while. If you lose that though, you're lost the trend and you should retrace all the way. I don't see a reason for that to happen. So for those reasons, there you have it.
Yeah, and it seems like 300 is inevitable for this one. People have been waiting for that to happen.
350 is what you meant, right? Yeah. He meant 350, guys. Read our reports. Yeah, I mean, same thing. But okay, so you could go both ways, right? So like, if it doesn't like bearish retracement, if it can't get over, what is this? 920? She not happening. But TBD, we need to let that. It's from the earnings moment. Anyways, I'm not going to go too deep. I'm not going to give you too much sauce. That's mine. I'm keeping it. You see this RTX, RXT rack space? This used to be like a multi-cloud, like this is like DigitalOcean, but different.
But okay, so so this is sub 1 billion. The market at this point is just finding anything that is.
That's my point. So the market is like, this is an old darling. This is not this is IPO, different leadership. This was the cloud was just becoming a thing. And then the clouds were built and then there was really not a need for rack space anymore. But the market is in a land grab, right? Because Micron, AMD, Intel, Cisco, it's already happened. It's already happened. They still have room, but like it's in a land grab to find the next one. And I think there's just too much this is what I mean, why there's so much money available right now. There's money left and right. If and only if you know where to look. That's all I can say. I've just hopefully helped a lot of people kind of like iron into what to look for and then how to trade it. But yeah, stick with this, dude. Stick with the theme until proven otherwise, basically.
Okay, let's end on Bitcoin, ETH, BMNR, MicroStrategy. I mean, this is getting. You said it could see.
Yeah, Biddy, I said a 90, right? So yep. I said it should at least go to 90. That's at least. We're at the first kind of like, okay, we've had a good move off the 70K area. So again, I'm not trying to snipe the low of 60. It wasn't my deal. But where I can be like, all right, this is ready to roll for a little bit, 71 or like whatever that is, 70,900 initially. So this should, I think this move, this is a given. And that's kind of what I said is like a given to 90. So I got a little bit more at this point for this first move. It doesn't have to happen right now. So you're right in the 200 day. I think this could take a while. As long as it's holding 78, I think you're fine. Then I would expect it to go to 85. And that's as the 200 day. So basically, I would expect a pretty nasty rejection right here, right now at the 200 day simple moving average. And I would not get discouraged. I would expect that to come in somewhere around the 78K, 77. And then I would expect consolidation as the SMA catches up. Then I would expect out of nowhere, poof to 85. And that's when it's really like, oh shit. Sorry. And then that's how you get to 93. And so that is where this is one step at a time. This is not and again, I don't know that that's not a sell, right? So this is like accumulation. This has to happen. If it's over 85, that's your trigger. That's happening into basically 100, essentially. But for all intents and purposes, this has everything it needs to get at least to 90 from here after a small pullback right now. That same with ETH.
Okay, so then can we just do BMNR real quick as well, since people are asking that?
It's 30.
Yeah, that's actually the level I was thinking at as well.
It's 30. Yeah. So it's literally right here. I can't say this yet. So this is actually, so first of all, it hasn't broken out. It's holding. I think this can come into like low, doesn't matter. Like, I don't think it matters. Like, the difference here, I don't actually have a real break of structure. I think you already kind of, like, I feel like you already had your pullback and that was at 20 and you should just be chilling right now, waiting for this to happen. If you didn't, then I don't think it matters. Like if you're buying it, if you're trading BMR to 30, which is a sell, I don't think it matters if you're buying at 23 versus 2150 is my point. So whatever. 2150 is where I could see it pulling back to, and this whole idea still be valid. I just don't want to see it sub 20. Then all bets are off. The problem I have with BMNR is that, like, I don't know that it's going to be a proxy, because it's not a proxy anymore, because they went out and they bought all kinds of other stuff that has nothing to do with Ethereum. And they're doing all kinds of weird stuff that has nothing to do with Bitcoin. I don't think it's going to be a proxy anymore. Not the way that it could have been previously. That's my sentiment. Because I don't want anything to do with Beast Industries, although, you know, love the guy, but I wouldn't have invested in that. Nah, I'm cool. See ya.
All right.
But that's the trade. It's building here. So, but 30s is a sell. Like, this is a trade. Like, that's where the trade is complete. Below 30 even.
You don't think we're out of crypto winter or anything like that?
No, that's what I'm saying. So I can't say that we're out of the crypto winter. I can say, just like I could say, like, we had a chance at the lows when we were in LA. I was like, my sentiment then was like, we could probably be in, I literally said, a sucker's rally, right? And like, honestly, like that was the setup. Did it end up being a sucker's rally? No. The person who faded ended up being the sucker, right? The person who faded this rally ended up being the sucker at the end of the day. But, and I didn't have this crazy situation in the cards at that point. I did not see that happening, but it happened nonetheless. That is what I'm saying right now about crypto. I do not see 4,000 on Ethereum happening, but I didn't see 8,000 on SPY happening either in March, right? Like, I didn't. And it's gotten closer and closer, but it starts like this. So that said, I don't see 4K right now, but things can change. We're trading price action. If price tells me different, then I'll tell you different. But right now, I can see a rally. I can see a nice bounce. Ethereum, I can see just under 3K at least. And if it doesn't even get there, like I said before, it would be sad.
And then MSTR real quick. I'm assuming that breaks out if Bitcoin breaks out. It's actually up 20% this year. It's had a good year, to be honest.
I know, right? Like you said. So this is why I'm like, I don't care how much a stock is down or up on a year. Like, I really don't ever care about that. And I know people do, but it's for this reason right here. I don't want a stock being up 50% on the year, which, what is this? February. By the way, MSTR is up 80% from the lows. I don't want a stock being up 80% from the lows stopping me from entering. Like, if this reverses, what do I care? Anyway, so it's the same sentiment on a lot of these things like software. And that only works, by the way, if your time horizon's right? And at the same time, just you don't want to discount the fact that this could go to zero, or you don't know, right? So if you buy anything, you really have to follow what's going on with the companies and what they're doing, things like that. So I think it's super important. But this is general support that it just came out of from 2024 over here from a chart perspective. Now, I will also say that this is probably not the same kind of mechanics as it used to have, because they've done all these crazy spinoffs. And I don't know that this chart up here is that relevant because of all the other equity spinoffs that they have that pay dividends and things like that. So I don't know how relevant that is. I would say the near recency like is 150 support, just over 150. That this could still pull back into and still be a long. So again, you know, I wouldn't be discouraged if this is down 20%, it might be a long. Doesn't even have to do that. If it's just on this most recent one, if it's 167, that's still a long. So yeah, I like it basically in this box as a watch. And so what I mean by that is that I won't, by the way, for anybody who's trying to figure out how to trade, and like when I say numbers, things like that, I might say 151 support on MSTR, between 165 and 151 on MSTR. If you want to know how I'm trading that, I'm not buying because it's in that area. What I'm looking for is like, that is the area of interest. I'm buying when it's coming out of that area. I hope that makes sense. So like, I can see it coming in here, but when it's coming out, literally, of that support zone, that's when I know it's ready. Because otherwise, I don't want to get, like I said, I'm a trader. I want to make money. I don't want to get stuck in a chop that could chop for, you don't know how long, right? So I don't want to get stuck in this, which is why I'm waiting for that low to hit and then buyers to step in and price to show me that it's ready to come out of support.
All right.
Yeah, MP Materials, someone just mentioned that. Look, you got earnings coming. Again, the trade up to earnings, this is a very bullish setup. Extreme bullishness on this parabolic-like setup. I don't know that it happens because we're having earnings, but whatever happens post earnings, what I can tell you is if after earnings, it's getting through 80, she's probably gone, which means that like, you got to wait for earnings, but I showed you a little trick already. Otherwise, expect to pullbacks into sub 60s, just sub 60, and then we'll see.
You also got the U.S. government with a stake in this one.
Dude, that's what I'm saying, man. This is like your low key next AI trade. This is not a
Intel.
I'm just saying there's so much money to be made. It's disgusting me right now. And the amount of work that I have to do in general to find these plays is absolutely out of control, right? It's absolutely out of control. You guys are asking me for stuff on earnings. Like I can't, I don't know. After earnings, I already showed you a trick. I think that's super important, but still on the names that are down the worst in the AI demand stack, if you will, dude, all of the names that are not gone, that are down, these names are all down today. Like, I'm just saying.
I think the problem is some people are saying even that idea that there's so much money to be found in all these names is the euphoria, whereas the bulls are saying no, that is the point of this market. It's not an everything rally. It's a,
it's not an everything rally. It's a addressable market for created by AI. I'm not saying semiconductors. I really don't like that. It's not semiconductors. Like it's everything associated with AI. It's not only semiconductors.
Except software.
Not except software. If you're associated with AI and demand created by AI, i.e. Synaptics, Synopsys, Cadence, dude, that is just software, very adjacent
to AI. I give you because they're chips, but
they're not chips, they're software. That's literally my argument. Those two are my argument.
Chip design is very close to chips, whereas
that's
AI
what I'm
enterprise,
saying.
but ServiceNow's AI enterprise workflows, that's AI. It's just not the type of AI.
No, so that's the difference is that, okay, so they're not showing it. If those companies, if those companies all of a sudden, boom, say, we are now benefiting Amcor. Well, dude, I'm just saying, I actually opened a new trade on Amcor today. Do you listen to these calls? It's disgusting. Like it's literally Amcor, ASE, Not ASE, it's ASX, which is ASE Technologies. That's the bigger packaging play. And then, dude, this one's kind of scary. Camtech. This is the purest pure play advanced packaging out there.
The Sterling infrastructure one was also like eye-opening in regards to data center.
Why?
Well, it was eye-opening. Yeah, Caterpillar. The construction's names are now
have been. Yeah, it's not new though. That's what I'm saying. It's not new. It's just like, it is like, oh my God. When you see those construction companies doing this, and like, I don't know, you just look at this chart. That's John Deere. I don't know. When you, by the way, this is like, I believe what happens when the construction company doesn't deliver. Holding company, construction, fabrication, maintenance, HVAC doesn't deliver. That's what happens. Oh my God, Flextronics, dude, this is just gross. I don't even know what to do here. Like, what are we doing, man? By the way, wasn't Wolf down? Like, just look at this. Look at this, Amit. Wolf was down 26% on the print. On the print, Wolf speed was down 26%. Close of the day up 17%. I mean,
HUD was up 31% today on a.
Yeah. So, I mean, anyways, I think this is kind of like my point. We're like, look, they're not all going to be winners, but the market to me is in a moment of a land grab where, yes, I agree. A lot of dumb names that don't deserve to run will probably run, and they will probably run into their earnings reports. Brass tacks hits during the report. They might get shellacked. They might not. That is a gamble. But after the season's done, the real winners will start to really emerge, and they'll hold their gains. And it's going to become glaringly obviously who the real ones are, who aren't. And as we go forward throughout the years, more companies like maybe a ServiceNow begins to develop a platform, or maybe CRM actually starts to see some real benefit from their AI products. But until that actually happens, expect more of the same. The moment that happens, though, those stocks will rally. That they are AI adjacent. Will they be the ones that will CRM and ServiceNow, Pure Storage, be the ones that are the winners at the end of the day? We don't know that. And until we know that, expect more of the same. And I think that is the message. Can these turn around if they can inject AI into this stuff? They can, but the market is a act first, ask questions later kind of thing. And you might get a knee-jerk reaction, and then they'll start looking into it, and then the speculation begins. Right now, the speculation is on the broad land grab of like, okay, who's the next AI company to actually, go? And we're seeing that drop down in market cap. So the smaller, to your point, smaller market cap names are the ones to look at right here, right now, because they're just going down on the tier stack, which is also down in quality. But at the same time, like, those are good trades, and maybe one of those actually work out, but maybe not too. But that's where the market is looking.
All right, folks.
Jason needs to sign my chest, dude.
That'll be the real top,
dude.
Maybe in Chicago, which Jason will be at this weekend.
Who is in Chicago? Who are we seeing this weekend?
So Steve, Mead, and Jason, I guess, will be the community members. Chris can't make it this time. But there are a few people from the chat. Chels, Matt Hollis. We're going to have about 120 people there. Got George.
George is in.
Jason will be there. Jason has a backdrop that he's ordered.
Oh, shit. No, Tony's working on it. So I told him to make one. Go ahead and make one. So, like, yeah. So I wanted this. Why don't you ever have your currently right now sign?
Dude, I do. No. Well, that's just camera positioning. But if I turn it on, the glare it like blinds the camera.
You can't. Is it a flicker? Because I know it's really hard.
It's not a flicker. It's just not neon green. It's like a.
If you look really close, there is a flicker on the wall that you can see. that's really hard to get rid of on Neon.
Yeah. Oh yeah, Doug will be there. June almost made it, but she had something come up. So
Doug is coming. June's not coming.
she almost did, but she has something come up.
Wow. I don't know if I can go anymore, dude. I've seen June at literally every meetup.
That's true.
Powell,
saw her at
this
the
guy
Bay
Powell, yeah,
Area
Powell.
and then the LA one.
Yeah. Oh man. I don't know. I feel like we should cycle time. Is he going to be there?
I don't
Red
know.
Line Engineers. Yeah, I work in data center. Yeah, Industries is a mini Quanta Services, dude. I don't know. That chart is crazy. But it's dude. There's a lot of stuff. I know that a lot of people from our group are going to be there. I'm excited. I know that you're taking off tomorrow. I'm jumping on a plane with with one of my guys tomorrow, Friday night. So we will be there. Is Erwin coming?
Erwin is not coming, unfortunately.
Do we want to? Should we sponsor somebody or what? Is this the thing?
No, Erwin had some like work stuff come up.
Okay.
Zoe's selling his house. Zoe, it's been a minute since I've seen Zoe, so hopefully we'll get him at the next one. But
oh no, dude, I'm kind of excited because like Chicago, I've always known as like the trader capital of the US, like for real trader capital. So I'm like, ooh, these might be my people.
so world option pits really,
Dude. Yeah, literally.
All right. Thank you, everybody. Jason's Twitter. Please make sure to follow him. Happy we got the session in today. We'll be back again next week as always.
There's a link on my Twitter, guys. Please click it. They will if you like what we do, if you're interested in learning any of this kind of stuff, it's in my bio. Just talk to the guys. We will get you in the server. We get you a bunch of classes for free to get you started. And Amit's coming. He's coming. He will be in the community. That's all I know. I just put you on blast, but there it is. I think you have to click School of Gains. So click School of Gains. I'll update this later, but that'll get you instantly in. And like a handful of free lessons that take you from literally knowing nothing, by the way, about trading. Because I started as an investor. The school is geared for people that start from knowing nothing in the stock market. Maybe, some investor, it actually doesn't matter. You could be anywhere, but it takes you from knowing nothing all the way to be like pro trader. And we're releasing new episodes all the time. I got a handful of episodes right now for anybody in my crew. We're going to release probably this weekend, a whole nother series. Like Shem Pasta, OG for sure. OG Shem Pasta, you need to come see the new curriculum. It's crazy. But reach out. I got you. Anyways, there is the crew is cleaning house right now. Like it sometimes I get a little jealous. I've seen so many people roll so much. I
saw the 500% Qualcomm call in like an hour. I was like, okay.
That was everybody, right? that was mine. But like the thing is that you learn the concepts. The idea is not to teach you my system. The idea is to teach you how to be a good trader in general and develop your own system, because not everybody trades the same. Not everybody has the same schedule. Your schedule is incredibly unique, right? Everybody is different. And so we teach you the concepts so that you can create your own system and get repetitive results over and over and over. And honestly, that's what I'm seeing. I'm seeing like us lay out a bunch of trades, and I'm seeing the crew like eat like absolutely clean house. I've seen people roll like 10K into millions lately, which is just insanity. They're very unique, but it wasn't the first time. I've seen it multiple times over recently, and I'm like, oh my goodness. It's been cool. It's been very cool. People think you have to have a lot of money to make a lot of money. People think you have to risk a lot of money to make a lot of money. That's couldn't be further from the truth. But anyways.
All right.
No. Love you guys. It's been real. Appreciate you, dude.
Yep. Jason will be on next week. Happy we got it. And for those in Chicago, we will.
Chicago, Windy City, here we come.
Thank you, everybody. Have a good one. See you guys tomorrow morning.
Peace.